is renewable energy and see this share consistently increasing is what the company is hoping over the next few quarters.
Thank you so much, Puneet, for all the details. Well, Avinash, what is your view on this counter company into renewable and BESS projects, considering BESS, being a hot topic when it comes to power? Good order book, overall stand at around 13,268 crore. What should investors do today? Stock is up almost 7%.
No, I think, frankly, Varsha, the company should do well. I think a 13,000 crore order book gives them a very good kind of revenue visibility for the next 12 to 18 months. And I think the only point to note is that, the kind of margin pressure we saw on Q3, whether it will be controlled or whether margins would further come down in Q4. But I think structurally, the company seems to be on a strong wicket. The kind of orders they've got, the 1,700 crore order for the BESS project, I think definitely should add a little bit of sheen to the margins and obviously to the revenue growth. I think this quarter was a little bit of disappointment on the margin front. Markets were expecting a slightly better traction in profit. I think the PAT increased by just about 8%. But hopefully the fourth quarter should be good. And I think, from a medium-term perspective, one can definitely look at the stock maybe at a slightly lower level. We are positive on the stock, but with a 12 to 15-month time frame, I think within this space, the company has delivered good numbers. And I think FY27 should also be a lot better.
HPL Electric is another counter that remains in focus. The stock has been gaining for the second consecutive session. And in the last two sessions, it has gained nearly 16%. If you look at the volumes today, they are nearly 4 times its 20-day average. So what's buzzing here? Firstly, the third quarter numbers. The company's revenue were up 21%, while EBITDA was up 29%. So clear margin expansion is something that we have seen in the third quarter compared to last year. Now this growth was strong largely on the back of increase in meter deliveries. Now meter deliveries increased by nearly 25% on a sequential basis following a weak or a flat first half of this financial year. So which means that for the first half, the deliveries were quite weak, and in third quarter it has picked up and is expected to remain so even going forward. Now if you look at the order book, it stands at close to 3,000 crore rupees, which gives us a strong revenue visibility for the company. And as I was mentioning, that the fourth quarter is also expected to be strong. In fact, management has said that the fourth quarter would be one of the strongest quarter in this financial year for the company. And for FY27, the company is eyeing a 25% growth on top line front. They're expecting smart water meters to be launched in the second half of FY27. So that will also start contributing to the top line. And they also say that the recent free trade agreements with UK and Europe will also boost exports going forward for the company. Now, if you look at the consumer and the industrial segment of the company, the switchgear segment grew 33%, wires and cable grew by nearly 60%. Obviously, the base is low here, but 60% growth is quite encouraging given the fact that there is still competition in this segment. And the company has also increased their reach to around 900 authorized dealers and 85,000 retailers. And going forward, there's also a product expansion that could come in, and they're actively evaluating a move into higher voltage cables, and they're expecting some progression to happen over the next 3 to 5 years. So still a long way to go for that, but the current businesses are doing quite good for HPL Electric, and that is the reason why the stock has been gaining for the last couple of sessions. Any view on this, Avinash? You must have tracked this counter. Strong growth plans as well going forward. 25% growth is seen for FY27.
No, I think, Swamit, company should do well. I think, first of all, as you rightly mentioned, they have a large order book of 3,000 crores. And typically, the fourth quarter is something which is supposed to be a very strong quarter for them. Last year, in the fourth quarter, they made a PAT of 37 crores. So I think what the management is saying is absolutely right. Fourth quarter is going to be extremely strong. And I think last year, they made a PAT of roughly about 80 crores plus. So this year should be a good year. I think the third quarter numbers are a clear indicative, of the number kind of trend expected in Q4. I would say that, once the market cools down and maybe you get an opportunity to buy the share at a slightly lower level, it could be a good opportunity in the mid-cap space.
Right, got that view. Well, thank you so much, Avinash, for, joining this conversation. Always pleasure to have you. Thank you so much. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzer. Stay tuned to NDTV Profit.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition with me, Puneet, and as well as Soumit Sarkar. Now, over the next half an hour or so, we'll try and solve all your stock-related queries. Those that we might have missed in the morning, so do start sending them, and some of you already have. So we'll get into those very quickly. But a very quick check of how the markets are doing. We've seen consistent buying on the Nifty 50, and that has waned off a little bit in the last hour. So we're now very close to where we started off the day with, maintaining that 25,900 mark. Hopefully can continue to do so as well. The mid cap and the small cap is the other index where we've seen buying today consistently across indices, and even there you can see that post that high of the day we've seen some selling as well. So we continue to monitor that aspect as well. And finally the BSE 500, the other aspect that we continue to monitor, because on the back of you can say quarterly results, individual news flow, order wins, India, US, Bangladesh, US impact. You've seen all of those impacts today on a clutch of stocks. And Chemplast, Sanmar, Sterlite Tech on the back of earnings, CIE Automotive, Praj Industries seeing the first set of buying probably after a deep correction in 2025. So all of those stocks continue to be in focus. But let me also welcome in our guest at this point of time. Rajesh Bhosle, the equity technical and derivative analyst at Angel One. We also have Tapan Doshi of CA Tapan. Gentlemen, both of you, thanks so much for joining in today. Let me go across and then start with the first question. Now, this one is coming from Amit. He's holding Exide as well as Concor, and both for the long term, suffering losses on both of them. So he's asking what he should continue doing with either of those stocks. Now, Tapan, Exide had some positive commentary and we saw that reaction in terms of the stock price. What would you recommend for Exide as well as for Concor?
Yeah, Puneet, the result was last quarter was okay for Exide, and yes, and the management commentary was positive. Somehow this stock is not able to perform, but I think in next few quarters, I think demand will be there and EV sales will go up. I think this counter will be benefit. They have a good agreement also. So I'm positive on Exide, so he can hold Exide. And for Concor also, I think you can see the government is taking lot of steps. And I think from here, I think even though, I'm not too much positive about the fundamentals, but still I can wait for 1 or 2 quarter more, 1 quarter more at least. I think some positive development may come. Don't buy any stock, but if you have already the stock you have, please hold it. I think by next quarter, some uptick may be there.
Right. The next query is coming in from Anand Dareshwar, and it's on Vedant Fashion. He's holding 75 shares, bought at a price of 640. Current rate is around 500. So he's sitting on a loss. Tapan, what should he do? Should he continue to hold this counter?
Honestly, I'm not too positive about this stock. No, if you see continuously that results are not coming great, even the management commentary is not encouraging. I think they have a margin issue, lot of competition coming from online department also. So I'm not too positive. If it come up, and I think better he should get out and go to better stocks.
And definitely was the GST rate increase on clothing about 2,500 was the last kicker essentially for this counter. But continue to monitor that in terms of the quarterly results and commentary that comes out of it. Next caller coming in from Mysuru actually, and this is Vishwas dialing in for a stock query. Vishwas, good afternoon. Welcome to Ask Profit. What's your query?
Sir, KPI Green Energy, 1,000 quantity in average price of 480, 60,000 last seller or sir, please technical analysis, sir.
Okay, so you want a technical view on KPI Green. Got it. Rajesh, welcome to the show. What would you recommend Vishwas to do on KPI Green? He's bought it at 480, counter trading at 420 right now.
So I would suggest to hold on to it. As of now, we are seeing a double bottom structure on the daily chart, and recently there was a positive divergence as well. So somewhere around 386 to 390 is a very strong support zone. We expect a bounce back towards the levels of 200 DMA placed around 460. One needs to reassess the charts when it comes around 460. If the positive momentum continues, then the stock has a potential to extend towards 510, 520 levels. So as of now, hold on to it. 380, 385 seems to be a very strong support for this counter.
Right. The second The next query, in fact, is from Divya from Abu Dhabi, and she has around 50 shares of IRCTC bought at a price of close to around 699 rupees per share. She wants to know whether should she average out this counter because she can continue to hold this counter for the next 1 year. Tapan, any view here? There could be some selling that could come in for IRCTC given the fact that there is a high probability that the stock might move out of the MSCI index. But apart from that, fundamentally, what's your view?
Fundamentally, the only problem with this stock is, of course, earnings are steady, but overall government intervention is coming here and there. And again, the stock has lost that mojo also. I feel that better to get out from the stock. Because in future also, I think there will be a lot of interference for the government, and also, there will be issue on the margin part also. So maybe if it comes up, I think better to sell.
Got that view, Tapan, but another question that's coming in on WhatsApp now, and it's very pertinent to what's happening right now in the textile space. Now, our viewer Vivek is actually holding Gokaldas Exports at 807. Now, he's holding 300 shares. Counter is down today on the back of potential news flow of a new bilateral trade agreement between US as well as Bangladesh. And hence, this question is what he's saying. Should he continue to hold or sell out? Tapan, what would you recommend?
See, the stock has already run up a lot, and most of the positive of the trade deal already discounted. Now we have to track the quarterly results. Again, the Bangladesh thing, they'll face a good competition. So major positive is there. Now we have to see last 1 or 2 quarter, whatever loss was happened because of export, how it is been booked in the actually in the books, and we have to see how the margin will be behaving from here. So better not to get in at this level. I think it should wait. It may go down a little bit more.
The next query is coming in from Santosh from Chennai, and it's on shipbuilding companies. He wants to invest for long term. So Garden Reach, Cochin or Mazgaon, which would be a top pick here, Tapan?
I think 2 stocks I'll prefer. One is Mazgaon and another is GRSC. Both the stocks are doing well, and if you see, they have a very good order book. Of course, GRSC is a little bit expensive, but they have a very good order book. They are working on the execution. I think slowly and steadily and SIP manner he can buy. Mazgaon, I think he can buy at this level also. Of course, last 2 quarters of some one-time loss they have booked, but I think from here, I think books will be clean comparatively. So he can buy Mazgaon at this level also. GRSC and Mazgaon will be 2 preferred pick.
Well, the next question coming in is on office, and this one's from Prakash from Telangana. He's holding shares at 383 rupees per share, holding roughly 39 shares, and asking what he should do with this particular counter. Rajesh, what would you recommend on office solutions?
Well, I'm not tracking this counter. I didn't get the symbol, so I won't be able to comment on it.
It's AWFIS, the company which is in, of course, the real estate space, Rajesh. And basically, Prakash, I'll wait for you to pull it up because we've seen a lot of interest from this particular counter, because let's also look at the 1-year chart and it'll give you that perspective of what we're talking about. While there has been recent listings like WeWork, and when that counter was in focus, it's been in a downtrend for the last 12 months. So it's down 43% as we speak. But Rajesh, any luck pulling up this counter?
Yeah, so yesterday there was strong positive traction. Bullish engulfing formation was there in the stock. In fact, if we see 2024 lows, the stock had rebounded when it has listed from the same level. So it is retesting those levels. Some kind of support is there. So as of now, I would suggest him to hold. But when it bounces back towards the levels of around 425 to 430 levels, try to lighten up your position. So as of now, it's on a strong support. Some reversal is there. So hold on for the levels of 420 to 430 levels.
Viewers, if you have a stock related query, you can also call us on the number that's flashing on the top of the screen for any stock related query. But the next question is coming in, and this one's on Oil India. Now the question largely is for the short term outlook for the next 6 months. He's asking if he can buy now. And Jagdish is asking this question, he can buy now for this particular counter. But Rajesh, what would you recommend?
Yeah, both oil and ONGC, we are bullish on both of the counters. But recently, if we see the start of the Feb month, we have already seen sharp run. So I would suggest wait for some kind of dip when prices test its 20 DMA. It's now placed around 470, 475 levels. That would be ideal levels. It is also a breakout level. So I would suggest to buy on a dip towards 475. If he keeps a time horizon of around 6 months, the stock has potential to move towards the levels of 550 to 570 levels. So buy on dip would be suggested.
Jay Krishnan from Kerala wants to know which would be the best auto stock to buy at current levels for the next 9 months. Rajesh, anything on charts in the auto sector that looks attractive to you?
So two counters which we are liking. First is M&M. M&M recently had a bullish island reversal gap on the 200 DMA chart, and the kind of reversal we have seen, possibly the stock can retest its previous swing high for around 3850 and possibly then towards the 4200 levels. The second counter that I would suggest is Tata Motors passenger vehicle. Recently it has been underperforming, but now with the bullish divergence and double bottom formation, the stock has closed above 89 EMA after a long time. So possibly the stock can bounce back towards the levels of 410 to 420. So these two stocks we expect outperformance in the near term.
Rajesh, M&M, watch out for that counter tomorrow as well. Results coming in. Expected to be a strong quarter given the volumes that we've seen for M&M in this particular quarter across segments of both tractors and cars. So continue to monitor that. But another question that's coming in from the short term on Biocon. Now, a viewer is actually asking, Rajesh, Farman is asking if it's a good time to buy into this counter. What would you recommend?
So if we see since last few weeks, the prices are consolidating around 200 DMA, but that positive traction is not coming. So as of now, I would suggest to avoid if the prices moves above 385 levels, that would be a breakout. Once 385 is crossed, he can buy with a stop loss of around 370, and in the near term the stock can move towards the levels of 410. As compared to Biocon, I would suggest if possible move to Lupin. Lupin looks more positive. There is already a breakout, so Biocon wait for confirmation, but as compared to that, Lupin looks more positive.
Just yet another query coming your way, and it's on Unicommerce this time. Kavita from Australia has bought close to 1,000 shares of Unicommerce at a price of 103 rupees per share. She wants a view for the next 3 to 6 months on this, Rajesh.
So a very short time frame, and this has been an underperforming, so I would suggest avoid an exit on a bounce. The stock has been facing resistance on any bounce towards 50 DMA. So currently those levels are around 105 to 110 levels. So any bounce towards 105, 110, exit your position. No major strength in this counter.
Got the view, Rajesh, and definitely a recent listing in Unicommerce. But another caller coming in from Nagpur, and Manish has a stock query for us. Manish, good afternoon. Welcome to Ask Profit. What's your query?
Good afternoon, sir. Sir, I bought a Ola Electric share, 1,000 share at a price of 35, but it's kept on falling.
Okay.
So should it would be good idea to buy, average out, or just hold it or sell it? Sir, give me some advice.
And Manish, did you buy it largely basis of the correction on the stock because the fundamental?
No. I actually have an electric scooty, so I know this kind of things, electric. So that's why I bought it. Like Eicher share was also going up, so I thought electric vehicle would be good idea for my investment. But okay, it's not all right. It's only 10-12% down from my portfolio.
Got it. And can you hold it for a little while, Manish?
Yes, I'm going to hold it for, I don't know, as long as company would stay there.
Okay. Tapan, on Ola Electric, the counter has been down and out to say the least. And we've seen the complete opposite outperformance by Eicher, especially as a pure play competitor. Should Manish book out of Ola Electric, buy into something like Eicher, or go for a better TVS Bajaj kind of play? What would you recommend for him to get exposure in the EV space?
I do agree with you, Puneet, on this one. Ola Electric has been underperformer. They lost their ground completely in last 2 years. Eicher, TVS Motor, Bajaj, everyone has now exceeded their numbers compared to Ola Electric. Again, you see the financial, it's completely down. And again, still, you see the management is also selling the stake. Also, they are coming into BESS, but again, that is also you need a capex for this. So my suggestion, better to get out from this stock and go to, I think if he wants, I think Bajaj Auto, Hero Honda, compared to valuation wise, no, it's completely not actually. He can move there. That may be a good bargain.
Got your view, Tapan. The next question that's coming in, and this one's on Hindustan Zinc. Now, Navpreet from Jaipur is asking this question. He's holding 380 shares at 680 rupees per share. So, currently sitting on a loss. Asking what he should do with this particular counter. Rajesh, the metal pack has seen some correction and taken some losses for multiple investors. What would you recommend on Hindustan Zinc? Any chance for it to come back to that 680 mark for Navpreet?
So yeah, can expect 680 levels, but in the near term we expect volatility in this counter. Some uncertainty is there, so hold on to it, but it will take time. So the stock is likely to trade within the range of 520 680 levels. So on the downside, if we get a dip towards 520 levels, that coincides with 200 DMA, that would be ideal to add. But on the high side 680, there is a bearish gap, kicking formation that was seen on the daily chart. So that is 680 700 seems to be a stiff resistance. So on the high side, when it comes around 680 700, look to exit, and on the downside add around 520 levels.
Well, got that view, Rajesh. But Rajesh, Tapan and all our viewers, it's now time for the rapid fire round in this edition of Ask Profit. Request you, Tapan and Rajesh, to keep your answers on buy, sell and hold so that we can take as many queries in the next 3 minutes. First question on VA Tech Wabag. Hansh from Vijayawada is asking a short-term target to enter this particular counter. Rajesh?
Can add on to it, yes.
Right. The next query is from Shiva Ruddy from Guntur. He wants to know which would be the best AMC stock for the next 6 months. Rajesh, your view?
So HDFC AMC looks positive. 3,000 would be the target.
A 1 lakh rupee investment each in Senco or in Lupin. Rajesh, would you recommend that trade for the next 3 months?
So yes, I would suggest for the Lupin.
Gautam from Bangalore has 135 stocks or shares of KEC, bought at a price of 88.60, currently sitting on a loss. Should he hold or sell? Tapan, your view?
Hold it.
Nippon Life, ICICI AMC and HDFC AMC. Tapan, either of those stocks for the next 1 year, can Siva Reddy enter?
HDFC AMC.
Anil Kumar has few shares of Anantraj, bought at a price of 380. He can hold the shares for the next 5 years. Tapan, should he do that?
Yes, he can, and buy on dips.
Consider CAMS to enter the current price is what Chandrasekhar is asking, Rajesh.
Yes, can I add on to it?
A viewer from Philippines is holding shares of HDFC Bank and wants to know whether should he continue to hold that for the next 6 months, Rajesh?
Yes, hold on to it, add around 900 levels.
A 1 to 2 year view on NMDC, Tapan, is Kunal's question.
No, buy on dips.
Sriram from Chennai wants to know whether is it a good time to buy Tata Steel for medium to long term. Rajesh, any view here?
Buy on dips around 200 levels.
GAIL and ONGC is something that Ramanan holds. Should he continue to do that, Tapan?
Yeah, hold it.
Nagendra has bought few shares of Laurus Labs at a price of 966. Should he sell or hold? Tapan, your view?
Yeah, hold it.
Is Muthoot Microfin an ideal pick in that space? Tapan, is what Abdul Rashid is asking for the next 1 year.
Yeah, he can add. No problem.
Geeta from Bangalore has 35 shares of SBI at a price of 972. Should she hold or buy more? Tapan.
Yeah, he can buy more.
Cummins, is there a good entry point right now is what Venkat is asking, Tapan?
No, on dips.
Satya Kumar has 100 shares of MediAssist, bought at a price of 418. Should he sell or continue to hold this, Rajesh?
Yes, can hold on to it.
GMDC, Rajesh bought at 625 and he's bought 1,000 shares is what Babu from Hyderabad is asking. Should he continue?
Yes, hold on to it.
Mihala has few shares of NetWeb. Should she hold or sell, Rajesh?
Yes, hold on to it. 2800 would be the support.
Eternal or Geofinance, just to raise some cash, what can he sell, Tapan, in near term is what Anwar is asking.
I think Eternal.
Well, that's the end of the rapid fire as well as this edition of Ask Profit. Rajesh as well as Tapan, thanks so much for
2047.
at this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We're amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. Tech has changed. So should your tech show.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew and we'll take you through the next 1 hour of trade. It's been an interesting day of trade, and of course you're seeing from this that we're off the high point of the day for the benchmark Nifty 50, trading with gains of about 0.2%, and we're just above that 25,900 mark. Flitted briefly with that 25,600 mark, didn't go past it. It was actually below that. And the question is, do we move above the 26,000 mark eventually? Now, let's take a look at the broader markets before we delve into the details of the Nifty 50 and see where it's at, because you have a pretty decent spread. You have practically two gainers for every decline at this moment, and you have the mid-cap index that's trading with gains of about 0.4%, small cap index higher by about 0.5% or so. Nothing like what you saw in trade yesterday, where the small cap index gained close to 2.5% or thereabouts. But there are a few factors that are playing out, and we'll come to that in just a bit. Let's look at the heat map for the Nifty 50 just to see what's moving on the screen. And there is more green than red on the screen, but more red than there was in the morning. Right on top, you have Eternal that's doing particularly well, gaining about 5.5%. Tata Steel once again up and about. Bajaj Auto, Mahindra and Mahindra, by the way, reacting ahead of earnings. It's going to be in focus tomorrow, but that factor is doing well. And of course, the latest data from the Federation of Automotive Dealers has come through, and it looks like a pretty picture across the board. Automotive demand seems to be firing on all cylinders. Power Grid, NTPC, Maruti Suzuki, a few more names in the automotive pack doing okay. TCS making its way onto the top of the screen once again with gains of about 1.3% or thereabouts. Let's look at the bottom of the screen, and you have Shriram Finance that's down about 1.75% or thereabouts. You have Bajaj Finance, you have HCL Tech, you have Tata Consumer, and a few others that are losing about 1% or so, but that stops with Adani Enterprises. The rest are falling less than 0.5% or thereabouts. Let's pull up the sectoral heat map just to drive home the point of what's doing well and what's not. Media once again is up and about, but this is a very narrow sector. Bear that in mind. It has been up and about in the recent past. You have auto, you have metal, and you have consumption that is up and about. What's not doing well is pharma, down about 1/3%. Healthcare, that's down about 0.2% or so. What's interesting though is IT is in the green this time around, up about 0.4% or so. But let's talk about the factors that you should watch out for at this moment and what really is playing out right now. And there are a few. It is, of course, the Nifty expiry that is at play right now. And obviously, you are seeing a little bit of volatility from that perspective. The setup remains stronger for the Nifty as compared to the Nifty Bank at this moment. And options data is suggesting mixed trends. The mutual fund data is pretty robust, and the Jan SIP data, this SIP data, 31,002 crore rupees, is at record levels. But what's more interesting in that data, and we'll talk about it in more detail in just a bit, is that gold ETFs has seen record buying. In fact, the inflows into gold ETFs during the month were higher than the active equity category as a whole, which is saying something. The broader indices are healthy, and positive breadth is seen as something that I pointed out to you as well. And after we're done with these factors, you can take a look at the advanced decline ratio just to drive home that point. And the textile stocks are falling. This is entire pack that is under pressure after that US-Bangladesh trade deal. Global risk-on sentiment is something that you're seeing. Of course, Japanese stock markets are up and about, that Nikkei 225 gaining on account of that sweeping win that Takaichi has managed to achieve in Japan. And European markets have started in a mixed sort of a mode at this moment. But let's talk about what key levels you should watch out for at this moment. And we're joined, of course, by Ajit Mishra as well as Mr. Chokalingam. Both of them are going to be telling you about the stocks that you should keep on your radar. Gentlemen, good afternoon and thanks so much for taking the time. Ajit, I'll come to you first. On the benchmark and on the Nifty Bank, what are the key levels that you should watch out for? Is it still a buy on dip market?
Good afternoon, Alex. Yes, it's true. That's a buy on dip market, and especially the encouraging start to the week yesterday, and we are seeing the continuation of the move. Though, as you rightly mentioned, that the expiry play is currently undergoing, wherein we are seeing that the call writers are still intact at 26,000 mark, and that's the reason why Nifty is facing resistance across this hurdle. But at the same time, we have noticeable, put writing also at 25,900, 850 strike. So it's going to be a level close to around the current area is something that market might end. In the days to come, I believe that the overall tone is like to remain positive, and one should continue with buy on dips until we break 25,550 decisively. And the moment we break 26,000 mark, we'll be gradually shifting towards the record high zones. So as the Nifty is basically maintaining the positive tone, banking is one main reason behind this recovery or this outperformance. After this strong surge of the gap up that this index witnessed a couple of days ago, we are seeing a very gradual move. So we feel that there could be a bit of a consolidation in banking, while the other sectors on the rotational basis might help the index. But here, any dip toward, let's say, 60,200, 300 zone, that's the area basically where one should look for fresh long positions. 59,750, that's the major support. So that should be the stop loss. And gradually, we can see that 61,500, that is the key level that banking might test. So here also the tone looks positive, but yes, as of now, outperformance slightly higher in Nifty, considering the kind of rotational buying we are seeing in the other sectors.
All right. And individual stocks that you're seeing at this moment, based on the technical levels, do you have any recommendations?
Yeah, so BHEL, here is something that we are seeing after this strong recovery. There was base formation around the major moving averages, and now the stock is set for the next leg of the up move towards 290 plus area. So with stop at 270, 265, one can go long in BHEL at current levels. Another interesting stock that we like from the metal basket is NMDC. So it's been almost 1.5 years of consolidation. Currently, we are trading closer to the record highs, a very tight range consolidation, in the last 4-5 trading sessions. So it seems like a buying pivot formation before the next leg of the up move and the breakout. So here also you can accumulate at current levels with 79 as a stop loss and 92 as a positional targets.
All right. Okay, let's talk about individual counters that you should keep on your watch list. In fact, these are counters that we've had on our watch list through the day. The first up is Amber Enterprises, and a strong beat on all fronts is something that you've seen, and the stock is reacting duly to that. ISJEC is another stock that is reacting heavy, strong. Of course, this is strong Q3, and the margins have expanded quite considerably. Neeraj had this on his list in the morning. BSE is a stock that we're focused in on, and you've seen an increase in its derivative market share, and you've seen a pretty substantial improvement in the revenue, even on a sequential basis. So the stock stands out. It's gaining quite healthily in trade today. Railtel Corp has gotten a pretty substantial 455 crore order. It is reacting positively. Segal India has gotten a pretty large order, 1700 crore rupees or thereabouts. Linde India is reacting to numbers as well. Its EBITDA is up as much as 34%, and this is the second quarter in a row, at least, that it's done well again. And Praj Industries is not a big volume buzzer in the recent past. It is today though, and gaining on those volumes as well. Pfizer, pretty large 800 basis point improvement in margins in the quarter gone by, and that's why the stock is in focus. Bata, we were talking about it in the morning. We were surprised with the kind of gains that the stock had. Of course, it's cooled off from the high point of the day, with just about a 3% improvement in the revenue and an 80 basis point improvement in the margins. Seems to be enough for the street to give this stock a thumbs up, especially because it has been oversold. And the textile stocks, we spoke about this at the start, the Bangladesh tariffs, and I know that Tamanna has described this as 19-20 ka farak, but effectively you're talking about 18% for Bangladesh, 19% or thereabouts, or something like that for India, and effectively you're talking about, or 17 and 18% rather, and suddenly you're talking about that benefit that India was expected to have on the tariffs for this particular textile space that goes away. But let me go across to Mr. Chokalingam on that question, which is this perceived benefit that was very short-lived for the textile companies seems to have gone away. But is it as bad as people are thinking about it right now?
I don't think it is going to be very bad, even if marginally we lose out to countries like Vietnam and Bangladesh. I believe, the particularly the Coimbatore-based companies are scaling up. Of course, it's happening across the country. They're scaling up their capacities. I think, the fact that US now no longer is going to give a big threat, that's still being positive with capacity expansion, modernization. I think our industry also would start competing quite effectively with other Asian countries. So I am quite optimistic about a medium to long term. I don't think the fear is really warranted, to this extent at this juncture.
Got it. All right, we'll talk about more stocks, of course, but before that, let's go across to Somit. He's joining in to tell you about what the chatter is from the dealing rooms. Somit, seemingly a little bit of pressure on the banking pack today. At least it's an underperformer, relatively speaking. The market's holding out, though. The benchmark holding in green territory.
Well, yes, 25,900 is seen as a strong support level, but yes, we have come off a bit from the day's highest point, though. But 25,000, as long as we are holding about the 25,900 level, the market continues to be in the bull mode, is what technical analysts have indicated. But multiple stocks that remain in focus, and firstly, it's Aurobindo Pharma. Now, that counter is down nearly 7% in trade. Dealers are indicating that another facility of Aurobindo Pharma, that is the Unit 7 facility, is also ongoing US FDA inspection, and that is a major reason why the stock is down now around 7.5% in trade. So keep an eye out for Aurobindo Pharma. Delivery, there are sell flows on the large HNI desk, is what dealers have indicated, and this is largely because of valuation and concerns related to competition. When it comes to Federal Bank, there are some sell flows on institutional desk. Both foreign and domestic institutions have been selling this counter at higher levels. In fact, the stock has now come down and is trading in red, and delivery volumes also are expected to be on the higher side for Federal Bank. Eternal and Swiggy, both the counters are gaining in trade. There are buy flows on the large HNI desk. Dealers indicate that the competitive intensity has eased down. Separately, they are also saying that Eternal might see a block deal at a higher level that could come in. But as of now, that's not confirmed. But currently, we are seeing buy flows given the fact that the competitive intensity has come down, and either one of them has again has lowered the waivers that they used to give earlier on every order. And lastly, when it comes to Bharti Airtel, that stock is also seeing some selling pressure. Sell flows on the large HNI desk is what dealers have highlighted, and this is largely because dealers are expecting a block deal to come in soon when it comes to Bharti Airtel. So keep an eye out for Bharti Airtel as well in trade.
Interesting. All right. Thanks so much, Somit, for getting us those details. Now I want to drill down on a few stocks with Ajit as well from the broader markets, and some of these reacting to earnings, Ajit. And quite strongly at that. The question is on Bata though, because it was previously gaining about 8%. It's given up quite a bit of that ground. Now trading with gains of just about 3.8%. Is this sustainable considering that it was so oversold? It saw a pop today. Do you buy into it or do you stay clear?
So Alex, 2021 November, the stock was at around 2100 mark, and since then we are seeing gradual drift in this stock. Means earlier at least the attempts were sincere. Means we used to see that 30-40% kind of a rebound that this stock used to attempt whenever we see a recovery. But in the recent month, it completely changed the bias, and extreme sell-off was witnessed. And that has resulted in extreme oversold position, and now the marginal improvement in the earnings is triggering this rebound. But to negate this trend, I feel it's a very long journey. And first hurdle, closer to around, let's say 1,000, 1,050, that's a very strong hurdle I feel that the stock might face. In fact, prior to that also we might see a breather. So one should rather utilize this opportunity to exit in case if they are stuck at the higher levels, exit and switch to any of these banking names, auto counters wherein we are seeing strength.
Quick view, Mr. Chokalingam, on the footwear stocks, not necessarily only Bata, but Bata, of course, being sold into quite aggressively in the past. It is in oversold zone, and the technical indicators are not looking as rosy as some might have thought based on today's move. But would you prefer anything in the footwear space?
There are three insights which I have learned. One, the footwear used to be great theme in the stock market, but last 2 years we have seen so many new themes have come into the market, like solar, EMS, so many. So this theme has lost its favor. The kind of P multiple they used to enjoy, now they are not able to. And secondly, in my view, the competition has intensified, including unorganized sector. And particularly for Bata, if you look at the last 3 financial years, operating profit has been coming down. Even now, if you look at the December quarter also, just about 6% year-on-year growth in operating profit. So I think for this kind of financial performance in the recent years and latest quarter, I don't think a P rating of over 60 is justified. So I would give a sell call on Bata.
Point. All right. Now, let's shift gears to the automotive space, where my colleague has had an exclusive conversation with the Managing Director and Chief Executive Officer of Hyundai Motor India, Tarun Garg. Garg, in fact, calling India's deal with or agreement with the US a mega trade deal and a decisive and welcome step. So let's go across and listen in to what he had to say.
We have seen that the government, US and India have signed a BTA. How do you look at this from an auto sector's perspective?
Look, we still are awaiting the details, but I think any arrangement which happens, it's good for the economy. And whenever anything is good for the economy, it will be good for the auto sector. So we always welcome, whether it was the EU or whether it is the US or any other treaty, because that really opens up so many opportunities for all of us.
So the safeguard that we are seeing that are set in place by the government, the 2500cc cap is there, as well as the 3000cc cap is there. Do you believe that this is enough to save our industry?
Look, like I said, we still have to go into the details, but I'm sure that government is actively engaging with SIM and we're always giving feedback. So whatever has been done keeping in mind the overall interest, what will be good for the economy. So we are very confident that whatever will happen will be very good for the auto industry and of course for the country as a whole.
So the sales have been really good for the entire auto industry. Even Hyundai had a great Q3, and even if you talk also about retailers are also doing really well. Till when do you believe that this demand is going to sustain?
Look, I think very clearly the GST 2.0 reforms have really spurred the demand, and we are very thankful to the Honorable Prime Minister for really bringing back demand into the car industry. And January was very good. Even Hyundai had the highest ever sales in the history, and even the February momentum looks to be very good. So we are I think we are very hopeful. And also, if you see, with all these treaties happening, the sentiment is also positive. So I think while fundamentals are good, the sentiment is positive. Of course, the geopolitical risks remain, so we have to watch out for them. But overall, things looking much better than what they say about 10 months back.
So very lastly, how does the FY27 launch pipeline really looks like?
So I think on the investor day, we have already announced the launch pipeline, and what we are going to say is that yes, we are going to stick to that. So a lot of exciting times ahead.
All right, so the venue doing particularly well for Hyundai Motor India. And of course, we were speaking with the head of the Federation of Automotive Dealers Association, and he was positive across various categories, not least to which the passenger vehicle space, which is seeing a lot of demand. Sharad joining me now. And Sharad, the interesting setup today, and we've already spoken about some of the factors that are leading to where we stand right now. Of course, the bank Nifty underperforming a tad, but that's leading to...
the technical strength is lower. Yeah.
Exactly. So what are the major cues on the derivative side though?
On the derivative side, Alex, the options data is suggesting mixed cues coming in. And if you look at the overall build-up, long build-up is coming in Eternal and Amber Enterprises also. Largely looking at the stocks, this is of course the earnings reaction which is taking place for Amber Enterprises. Short covering for both the Tata group of stocks, Tata Elxsi and Tata Tech as well. Both of the stocks are up almost 2% in the trade. And long unwinding candidates, they include Voltas and Shriram Finance as well. A little bit of profit booking is definitely coming in Shriram Finance after a good rally which we saw in the medium term, and short build-up coming in for Aurobindo Pharma and Zydus Life Science. Zydus Life Science, of course, impacted on the back of the weaker earnings. But just to put that in perspective, Ajit, I just wanted your views on Eternal. That stock has been doing really well. Anything on the charts, key levels to watch out for?
So yes, Sharad, in fact, it's been like, after several days, we are seeing this kind of price action with volume. Means of late we had a couple of days of, rebound, but the volume was slightly on the back foot. Today, we have seen a very strong rebound, and we expect this rebound to further strengthen the moment we surpass this 306, 307 hurdle, which is closer to the previous swing highs that we are currently trading. And since there's hardly any resistance in terms of the levels and the OI data also, so it seems like that it's going to be a gradual journey towards 318, 324 in the near future. So yes, both from the derivative and technical front, it looks okay to go long in, even at current level after this recovery with 294 as a stop loss.
All right, it's time, gentlemen, to get into the rapid fire round. And Ajit, this is only for you because we'd like your quick view on the technicals based on the stocks that we picked up, and quite a few of these actually in our watch list as well. The first one is Praj Industries, a stock at pretty much the high point of the day, gaining on very high volumes. This is its biggest intraday gain since November 2024. Is this a buy, hold, or sell?
It's a hold.
Okay. JM Financial, the stock is up quite considerably as its peers have declined, and it's up as much as 11% over the past 5 trading days. The volume is more than 7 times its 20-day average. Is this a buy, sell, or hold?
Hold.
All right, Sun TV Network, the shares have risen almost 7% as the peers have advanced, and it's up 12% in the past 5 days. Trading volume also 12 times its 20-day average. Your views on that, Ajit?
Yeah, it's a buy with 590 as a stop loss and 670 position target.
Rainbow Children Medicare shares have seen a biggest intraday jump since July 24, and even the trading volume, that's up 2 times its 20-day average.
Use recovery to reduce around 1300 mark.
Amber Enterprises, the trading volumes, that has picked up 6 times its 20-day average, and the Q3 revenue also, looking at that, jumped 38%, while PAT jumped 128% on a year-on-year basis. Your view on that?
Hold with the trailing stop at 7200 for 8000, 8100 is position targets.
So very interesting set of stocks. But Sharad, what I was pointing out at the start, and you pointed this out in the newsroom as well, is that the entire textile pack has been under a tad bit of pressure today, and this is because what Tamanna called the 19-20 effect, right?
Yes, it's 18-19, but yes, it's the fact there.
So why don't you take us through the analysis that you picked up?
Well, interestingly, Alex, the issue is not just 18 or 19%. There are a lot of internals which are very much important, and India has not got those benefits. Let's just point it out. What's this entire situation all about? And Bangladesh trade, the important US deal which has come in, there are some exemptions also. And if somebody is there from Bangladesh, they are getting something called as a zero reciprocal trade also. That means if you're buying the inputs from US, then you are supposed to get that important benefit as well. Separate exemptions also, that's not given in for India. The concern definitely lies on this special treatment. But of course, the clarity has not come yet, and largely the impact is negative. Optically, this looks positive. That's what the comparison is when we compare the US trade agreement of India and Bangladesh when it comes to textile. But apart from this, what is important is the cotton imports which is coming in. India does around $200 million of it, while Bangladesh does $250 million of that. So in case Bangladesh does any kind of a switching, then there will be definitely a change in the supply chain. But remember, India does premium products in this textile space. Bangladesh does low cost mass products. So that's why there is a divergence in the product quality as well. Apart from the pricing, if Bangladesh switches from Indian to the US cotton, so these players will be negatively hit. This includes Vardhaman Textiles, Nitin Spinner, KPR Mills. They have a smaller exposure. Remember, they are backward integrated, and Ambika Cotton as well. That's where the moves can happen on the negative side. And of course, today we are seeing a little bit of profit booking as well. But Karur Vysya Bank, in an exclusive chat to NDTV Profit, stated that the US customers are ready to give tariff rebates to up to 66%. To put that in perspective, net it becomes 6%. And it's difficult to call to the extent of the advantage, but they do not think it's going to be too much. That's the Pearl Global Management which spoke to NDTV Profit. So overall, the industry is not very much convinced that it will be a very big adverse impact coming on the Indian markets, and still the strong inquiries have started coming, and it's a kind of, you could say, a structural shift for Tirupur, Ludhiana and Surat markets as well. That means the inquiries are strong. And remember, Indian cotton has a premium pricing versus the USA. That's what the trade experts have also given us the signals, and this won't be very cost effective for Bangladesh if they are using a lot of logistics costs coming in from US as well. So of course you could say that it's going to take time. And remember, Bangladesh switching over to US cotton imports, that might be a key headwind, but even if that happens, it will be a gradual process, and India's cost positioning might become weaker in the mass segments as well. That's the key headwinds coming in for the entire space. But there are key questions to be asked. What is the clarity for the zero duty for India exports? Will US come up with something new? The second question to be asked in this is, will Bangladesh switch from India to the US yarn? That's the second question, which is important. Third one is, has the global supply chain for textiles shifted to India? That's a long-term story, and any other surprises we can expect from the India-US trade deal for textiles, that's also something to talk about. And the last one is, India has to be a high-quality exporter for the European and the US markets. That means the long-term story might be very big. So, of course, that will be something we'll be watching out for. But joining us is R.K. Vij. He's the president of Textile Association. Good afternoon, sir, and thank you very much for joining with us. Now, this Bangladesh deal comes in, and some concerns come in as we go through the details. What's your initial take on that?
Good afternoon, Ram Ram. Actually, just now we got the message that USA and Bangladesh has come to some agreement. Detail has yet to be come. So now we are about around 3.4 to 3.5 billion dollar we are exporting to Bangladesh total in a year. And out of that, around 1.7 to 1.8 billion is of yarn, cotton, mostly the raw material, and rest is 1.2 billion is about the clothing and other things we are exporting. So looking to that, the cotton, USA is negotiating with Bangladesh because mostly the USA wanted to send their agro product to the Bangladesh, as with the treaty with the India, we are not allowing USA to import at zero duty. Now, it is the matter of the fact is that we are not going to hit much because Bangladesh is just near to on the border to India. The freight cost is very less, the transit time is very less, and all the machineries are set to them. And of course, we don't have any cotton surplus also. The season is, cotton season remains from October, November, December to next year. So now it is already February, March, April. So the cotton will be used inside itself. I don't think any hit will be there on the export of our yarn and other things to Bangladesh as on today. Of course, India is a very strong economy, and with the last few decisions taken by our Indian government of PLI scheme, Mega Park, that will help us. And another thing is there that we have taken, our government has done the FTA with the EU countries also.
With sir, of course, the entire initial situation seems like there's not going to be a major impact coming in for the yarn players as well. But I just wanted to get your industry-specific views. You know, you speak with a lot of exporters also. The inquiries seem to have picked up in most of the textile hubs of India. And what's the key ground channel check suggesting for today?
Actually, after this, when the tariff on USA has come down from 50% extra 25 to 18%, immediately, because traditionally we are supplying to USA, query is coming, our export has increased. So even in Bangladesh also, they will not switch immediately. Switching to any other product is not easy in textile because the raw material is there. The transit times are there. So I don't think that there will be any difficulty for Indian government in the case of textile.
Right. Thank you very much, Vid sir, for giving your views on the industry. And overall, there isn't much impact as what initially we are saying. Thank you very much for taking out your time. It's always a pleasure. But one more segment has done really well, and that's of course the gold ETF segment. But to give you all the details about it, the January mutual fund numbers have come in, and it's gold better than equity, it seems. Alex is here with all the details.
Well, it's 24 karat magic in the air, and that's a song that's playing out in the mutual fund industry today. I'll tell you why. Let's pull up some of the data that's come through. Mutual fund industry has actually received record inflows into gold ETFs in the month gone by, in the month of January, and that is actually more or less the same as the active equity category as a whole has received. Both of them receiving about 24,000 crore rupees. In fact, if anything, gold ETFs have gotten slightly more than active equity has gotten. Active equity, by the way, includes flexi cap, large cap, mid cap, small cap, all of those together. Other ETFs, and this is the clincher, has gotten a further 15,000 crore rupees. What does this mean and why is it important? It also includes silver ETFs. So commodities as a whole has gotten a lot of inflows. This is reinforced by the fact that multi-asset funds have gotten inflows of 10,500, close to that, crore rupees, and this is got a commodities subcomponent as well. What is the context? And this is important to bear in mind because there could be a recency bias at play. In fact, it's almost certain that there is. Gold prices have risen nearly 13% in January, up to the 29th of January, at which point they have dropped over 10%. So a lot of people try to ride that rally. In fact, there could also have been instances of selling in certain other pockets and booking out perhaps in the sectoral thematic category or even in the corporate bonds category and a few other categories to buy into both multi-asset funds as well as gold and silver ETFs. So this is important to bear in mind. Of course, for the SIP figure, and this is something that we track very closely, it stayed the same at 31,000 odd crore rupees, which is strong. Of course, the net figure is much lower. A strong fixed income inflow, this is normally something that happens at the start of the quarter, has actually led to a pretty robust inflow overall for the mutual fund industry as a whole. And this is despite pretty low NFO activity, that's new fund offer activity. That only saw inflows of about 1,939 crore rupees, about 800 crore rupees or thereabouts in equity NFO. So all told, it's an interesting snapshot of how people are looking to invest. A lot of people gravitating towards gold and silver, but a lot of analysts, a lot of experts, a lot of advisors are pointing to the need to keep your asset allocation intact and don't jump whole hog into commodities because they could be risky. We'll talk more in just a bit, but we have to slip into a very quick break. More on the other side, and we're back to the equity markets.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs, and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Welcome back to India Market Close, and joining us is Amit Goel. He's a SEBI RA at partner and co-founder at Blue Oak Wealth. Good afternoon, Amit. And looking at the markets, of course, for the second straight day, the technical levels have been strong, especially for Nifty. Not that good for Nifty Bank, but of course, the Nifty expiry is also at play. What are the key levels to look at? Of course, the resistance levels seem to have moved up as well as we speak. But Amit, what will be your view on Nifty and Nifty Bank?
Hi, good afternoon, Sharad, and thanks for having me. If you have noticed last 3 days, the technical parameters very clearly point towards a bullish reversal in play after the massive sell-off on account of the trade deal news on Tuesday last week. We did make a bullish hammer pattern in both Nifty as well as in Bank Nifty 3 sessions back. And we are what you would call, we are basically shifting the support a little bit up every session. Today, if you look at the expiry data for Nifty, the max pain has shifted from 900 to 950, and the resistances are also, giving up and moving up. So all in all, I am cautiously optimistic, at least on Nifty and the broad-based indices, which is micro cap and small cap index, which are showing strength. So the buying is happening in a broad-based manner. Nifty Bank has already run up. Maybe there is some sector reallocation happening. So I'm more bullish on the broad indices on Nifty and circumspect about Bank Nifty. Sharad.
All right, thanks for that. Amit, just hold on. We'll come to your technical picks also, but let's flash Escorts Kubota. The numbers is there on the screen. They have also announced a special dividend of 18 rupees per share. Let's look at the numbers, how they're panning out, and an interesting announcement of a greenfield expansion is also something which they have announced. Numbers which are coming on your screen, the revenue has jumped up 11% on a year-on-year basis. That's largely in line with what the street was estimating, but a good jump in the EBITDA. Let's just see what the margins have stated, and of course the management commentary will be important. A 200 basis points jump coming in. Chokalingam sir, I want to get you on this. Your views on Escorts Kubota for the medium term and the long term?
Certainly it's a hold. In case it declines, one can buy, because as all of us know, that the tractor industry is doing phenomenally well. For last 2-3 years, monsoon is good. This year also, the food grain output is likely to be a record high level, and water storage is much better than the last 10-year average. So the agri theme is playing out in a big way. I think it is good to hold. If it falls even marginally, one can buy.
Right. Amit, what will be your technical picks?
I'm liking Edelweiss. After the result, we have had very, very sharp volumes, and it looks like it is trying to give a breakout of the of a multi-month stronghold, which was between say 96 and 121. So a good breakout seems to be in the making. So you could probably go long at the current levels and keep a technical stop at around 116, 114. For possible targets of 128 or 132.
All right, Amit, we're coming back to you on what we call the rapid fire round, which lists out 4 or 5 stocks, and just give us your call on it, preferably as quickly as you can. Hyundai India is the one that we would like to know about first. The shares are up as much as 3.7% at this point. They were earlier up as much as 10%. That is the biggest intraday gain since Feb 2025, reacting to positive numbers. Would you buy into this?
I would not, because the chart pattern, there's a lot of profit booking at the higher levels of 6,800 and 7,000. So I would really wait for the price to break this range and only then go down.
Okay, Graphite India is the second one, rising as much as 4% intraday. In fact, it's up as much as 5% intraday, and the trading volume is double the 20-day average. The quarterly profit has turned around. It's coming at 68 crore rupees compared with a loss of 20 crore rupees. What's the recommendation?
Yeah, Graphite India, the trend is up, and we could consider to go long at the current levels, keeping a stop loss of a day low, which is around 640.
All right, and Aurobindo Pharma shares have fallen 5%, biggest intraday retreat since August 1st. Even the trading volumes, that's more than 3 times its 20-day average. Your views on that, Amit?
It's a weak stock. It's broken the moving averages even on the weekly time frame. The support for Aurobindo Pharma looks around the 150,000 levels. So maybe a basing around that could be a good opportunity to accumulate, but not at the current levels.
And Raintail stock gained almost 4%, and the trading volumes also jumped almost 9 times its 20-day average. Your views on that?
Yeah, Renewable is completely opposite to Aurobindo Pharma. It is actually trying to move up, and basis has based around 325. So one could look at going long for targets of about 375 with a stop of 325 on a technical front.
All right, and the last one, Eternal stock has got up almost 6%, and the shares up almost 34% in the past 52 weeks. Your views on that?
I mean, it's one of the strong performers, outperformers in the market of the last few sessions. It continues to show strength, so one could at any dips towards 300 290, one could pick it up with a tight stop of about 270 to 85 for possible targets of around 320 levels.
Okay. All right, so interesting set of stocks there. But you know what, let's focus in on BSE because arguably one of the stocks of the day. In fact, it is our stock of the day, and there were quite a few to choose from. But this one stands out because they've captured share in derivatives, haven't they?
Yes, and this is sustained capturing happening for the last 2 to 3 years, and that's why we saw the re-rating, Alex, in this. But I like to give you the entire perspective about the key reasons for it, and even a brokerage take. That's also very much important. And the key reasons for the rally, as I discussed with Alex, the most important reason is the market share gains in the derivatives. That's something there in this segment. Also, the second reason is that there's a strong revenue growth coming in. It's an all-round beat as compared to the street estimates. Highest quarterly revenue has been recorded. Apart from this, also, the important portion is that the transaction charges, that has risen almost 20% on a sequential basis as well, and that's why these stocks are rallying. Overall, the average daily lots and the notional turnover, that has also gone up in trade. Apart from this, let's look at what the brokerage take is. Jefferies has maintained hold, but the target price is hiked from 28.50 to 3050. They have even raised the EPS guidance up going ahead, and they say that the short-term growth driver is definitely going to be the market share gains. There's still a lack of clarity when it comes to the new product launches, especially post FY29. Also looking at the stock itself, the ones who are holding the stock, congratulations to you. 6 months, it's up 31%. This year itself, it's up 20%. So you can see how BSE has given strong returns to the investors as well. The valuations, it's slightly on the higher side. 12-month forward P is at 45 times. But if you compare that with the peak P, which BSE went in, that was 60 times. So there might be some more scope of an upside from here as well. Analyst take, looking at it, most of them buy and hold, 100% rating. All the 16 analysts are having this rating. There is not a single sell rating. And overall 12-month return, because of the stock going up, it's only just 7% odd. Mr. Chokkalingam, just a question on that BSE front. There is of course a very strong momentum coming in this stock after the earnings. How are you looking at this counter now?
I don't cover because I initiated around 60 rupees earlier. But of course, that should not influence my decision on the stock now. It's a fabulous performance, no doubt. Never expected this kind of market share gain from NSE. But as you also mentioned, the valuations are fairly, priced now. Once the NSE also gets listed, I am sure the competition from NSE will get intensified. So therefore, I would give sell call if it further rises even 5% from current level.
Let me ask a follow-up to that, Mr. Chokkalingam, which is that you have NSE that is round the corner, as you've pointed out. Would you be a buyer in the IPO, hypothetically, if it continues to trade at the levels that it is right now in the unlisted space? And some have pointed out that it's more active than certain listed companies. But having said that, would you be a buyer in the IPO?
If it is priced anywhere in the range of 40 to 50 PE, I would give a buy call on NSE. Because one thing one has to understand that this is going to be a perennially growth business, the stock market business. And right now it is only duopoly market. So up to 50 PE, I would be very comfortable in giving buy call on NSE.
All right. So that's a view on the exchange and the soon to be listed exchange. But we had a bit of a tough time choosing between a couple of stocks for stock of the day because there are quite a few that are already up and about. But Amber is one of them, right? And the reason being that the electronics division has surged as much as 79%. The net loss of 27 crore rupees is something that you can ignore because it's a beat on all fronts. The consumer durables business has grown as much as 27%. There are, of course, a few key takeaways, and we'll then go to Mr. Chokkalingam on what he thinks about the results. You had strong execution in the third quarter with broad-based segment growth. The electronics division, as I pointed out, has grown as much as 79%. Consumer durables is up as much as 27%. That's despite the room air conditioner demand being a tad bit weak and quite a bit of inventory in the system already. The mobility segment is expanded as much as 20% with strong order visibility as well. And the EMS space, which something that we're watching across various peers for Amber Enterprises as well, has achieved record margins with a 145% EBIT jump as well. So a very strong across the board margin expansion to the extent of 8.4% versus 7.4%. The only question is at 6.4% higher and a price of 7,500. Is it in the price? Mr. Chokkalingam, what do you think?
Fabulous performance. One has to accept it, no doubt at all. But the valuation above 100 P on a trailing basis, that is a cause of little worry for me. And secondly, in EMS space, if you see, if my memory is right, nearly 40 companies have got approval under the PLI scheme, including L&T is getting into this segment. That is going to be tremendous competition in EMS space. So considering these two, the overall valuation and the EMS space going to be very intensive in competition, I would give a sell call if it stock moves closer to 8,000 rupees.
All right. It's important to track price increase or decrease stories in the FMCG space because this is something that gives you a sense of how the company sometimes is viewing demand in the space and whether they feel comfortable enough to raise prices. And specifically on HUL, Ridhima Bhatnagar has picked up that HUL has in the recent past, last month, raised prices of two of its detergent brands, that is Surf Excel as well as Wheel. What is the extent of the price increase and what is the likely rationale as to why it has been increased? Ridhima is joining in to tell you just that. Ridhima, what have you picked up?
So absolutely, there has been a price increase as per our sources in two brands from HUL, which is your Surf Excel and Wheel. If you look at the price range in Surf Excel now, it's up by rupees 3, 152 to 155 rupees for 1 kg, and similarly for Wheel, 73 rupees to 76 rupees for the 1 kg pack. And let's understand how important is this business for HUL. So 25% of the revenue of HUL actually comes from detergents, which is about 16,000 crore. And if you look at the EBITDA margin, it's over 19%, which the detergents command. Now, why the price increase now? So we spoke to a couple of experts who told us that when the GST cuts were announced last year in September, detergents wasn't included in that. So the companies could look at this category to sort of increase the price, because in the other categories it's not possible right now. Secondly, they said that the input costs have stabilized for now compared to last year, which has reduced the competitive edge in the industry, and that's where the company could look at the price increase as of now in January. Now, we reached out to HUL as well, but we haven't received the comments so far. But what is interesting, one will have to wait and watch, that will the other detergent brands also increase the price after HUL? So that is something we'll have to wait and watch.
Thanks a lot for that, Ridhima. But Amit, I want to get you on this. HUL, technically a good intraday move coming in. It's near the day's high level as well. Your views on that? And also, if you could give your BTST picks.
Yeah, so HUL has been a strong performer in the last few trading sessions, and it continues to show strength. So I would like to ride on this momentum. It also looks like it is trying to break out of that stronghold that it has been held since last November. So it's a technical pick. One could look at going long here, keeping a stop just below the day's low, which is around 2,430, for eventual targets of around 2,490 and 2,530.
And what about your BTST idea?
So I still like Edelweiss, like I have mentioned earlier, because I see that there is a very strong momentum, and it is a likely candidate. It's a likelihood candidate of a strong breakout here. So 116 would be a technical stop, and one could look for targets of 128 and 132.
Right, that's the view coming in from Amit. But Titan's numbers are going to come today. And Mahima has arranged an important preview on what to expect. What are the key numbers to look at? Over to you, Mahima.
Right, so the overall expectation is, of course, a strong earnings coming in from Titan. That was reflected in the Q3 business update as well. The revenue is expected to rise around 33%. EBITDA may rise 46%. Margins, however, is a concern, because margins, they've said that it might be in that range of 11%, but estimates are that it might be in that range of 20.3%, which, if happens, could be because of the studded mix going lower. Net profit may see a rise of 45%. Now, quick view as to how overall the Q3 business update panned out. Robust jewelry growth, better than expected. Bio growth, however, was flat. So largely the rally was led by gold prices going up. Domestic jewelry growth at 38%. Jewelry growth at 41%. Tanishq, Mia, Zoya, Beyond, etc. saw growth of 40-odd%. CaratLane saw growth of 42%. Watches saw growth of 13%, and Eicher saw growth of 16%, and emerging business saw growth of around 14-odd%. Now, key things to watch. Comments on Beyond lab-grown diamonds. What are they exactly doing there? What are the expansion plans looking like, and what is the way forward, and how will this not affect Tanishq business going forward? Studded mix decline, how are they monitoring that, and how do they plan to bring that up and ramp that up? And lastly, margin trajectory is something that we'll be watching out for Titan earnings.
All right, thanks so much for that. Let's talk about Eicher Motors, and this is another one that you should watch out for clearly in trade tomorrow, because the results will be out post-market hours at this point, and the revenue is expected to go up by about 22% or so. EBITDA is seen growing close to a quarter or thereabouts, 24%. Margin is expected to rise as well, 40 basis points or thereabouts, 24.6%, and the profit as a result of which is likely to go up as much as 14%. So the context is important, of course. They saw strong sales after that GST action that took place. 21% increase in the quarter as a whole. Royal Enfield volumes have increased as much as 43% on a year-on-year basis, and you've seen strong demand trends in both the domestic as well as the export market for Royal Enfield. Now, some of the key important monitorables for the third quarter, the timeline, of course, heading ahead of the launch of the Flying Flea, the demand momentum in the 350cc space, and the commentary on sales of bikes above 350cc. Because remember, in the recent past, Sharad, there has been a question about Royal Enfield in particular after the US agreement with India, because it allows for bikes between 800 and 1600cc to be brought in with zero import duty.
Is it that Harley Davidson is having a tie-up with Hero MotoCorp?
Yes, that is indeed the case, and it would effectively pose a challenge in the space very close to that 800cc variant. And remember that Eicher Motors through Royal Enfield is looking to launch a vehicle very close to that mark. The question for you, Mr. Chokalingam, therefore, is do you think that this is going to be a challenge, or do you think that these are anyway in the pocket of space that is very low volume and is unlikely to move the needle too much for someone like an Eicher Motors?
Yeah, absolutely. Where you ended, I would start. It's not going to be big volume in the country. And secondly, without this particular segment, Eicher in the last 4 years has done phenomenally well. The operating profit consistent growth has been very impressive. Even in the last quarter, September quarter also has done superb. So I would say that, one can definitely hold, and small correction also happens, one can buy, because the P is around, trailing P is around, 36, 37. Otherwise, I would straight away give buy call. It's good to hold for medium to long term.
All right. And Amit, your views, we just discussed, me and Alex, on Titan also. The jewelry stocks did really well. We had an exclusive deep dive yesterday. And today also, Street is expecting there might be a surprise as well. Your views on the technical charts?
Titan has given up all the gains. Why it still shows that it is up by about 20 basis points or odd, but it has given up all the gains since the opening. So technically, it looks like a fade. So I would stay away from Titan till it crosses the high of today to take fresh positions. However, if you were to ask me on Eicher Motors, I'm a little more bullish on Eicher Motors chart preparation, because 7,063 would be a range in which it has the floor of the range, which it has formed in the last 4-5 trading sessions, and is now near a breakout level of 7,325. With results also around the corner, I guess if the results come good, there could be a strong gap up opening. So this could also be slightly risky, albeit a BTST sort of a call with stops of 7,063.
Right, that's the important view coming in from Amit. But MSCI's Feb rejig is also there. The announcement will be coming tomorrow, which is February the 11th. The adjustment date would be February 27th. And there are important stocks which should be in focus. There are key inclusions we can expect, and that's where the volume movements happen. This includes, of course, AB Capital, LT Finance, Federal Bank, AU Small Finance Bank, where we see significant flows coming in. If you just look at Federal Bank, that's where the volume movement can definitely happen on the last day, which is the adjustment day. Also, the February rejig, if you look at the weight downs, that's the exclusions where we can expect. This includes, of course, IRCTC, that's where the exclusion would be there. Almost $148 million of outflows expected. Nykaa, Vishal Mega Mart will be weight ups, but Astral, that's a borderline candidate where we can see more than $161 million of outflows coming in. So this is very much important. And Chokalingam, I just want to get Astral on that. A lot of talk is happening on the PVC pricing front also. Is there any kind of benefit comes in, as China is trying to reduce a lot of export incentives? What's your view on that?
No, if you're talking about PVC, yeah, the prices are likely to come down because a lot of expansions are taking place across the world. So also Astral has done extremely well. All of us know the only concern is the trailing P is close to 80. That is the only concern. So little risk-taking investors can always consider buying Astral.
Pull up Lumax if we can. Lumax Industries, of course, and this is a stock that is at upper circuit as we speak right now, and see the spike that you've seen. This is after the company posted its Q3 earnings, and the margins coming at 10.5%, a significant improvement compared with the previous quarter or the comparable quarter at 7.9%. The EBITDA uptick of as much as 58% during the quarter gone by. Revenue increased pretty strong at 19% or thereabouts, and net profit also up about 39%. The question is it still attractive at these prices? And Mr. Chokalingam, I know I'm throwing one from left field, as they say, because I've not probably given you enough time to look at the numbers. But this is a stock that has benefited from the improvement in demand for automotive, right? Would you say that you can look at this strongly, or do you think that it's a little too expensive at this point?
Little expensive, but still one can look at it. Expensive because it's around 39p on trading basis. But if you look at the last 7-8 years, the consistent growth is really phenomenal. Despite ups and downs in the automobile industry, this company has done extremely well. I am sure even when the difficult times they have done well, so going forward also they would do well. So certainly if somebody has investment horizon of more than 1-2 years, I think even now one can enter the stock.
Interesting. On the charts, though, on the charts, obviously, there's nothing that you can do at this point with the price at 6136 and at upper circuit. But Amit, once that opens up, what is your recommendation?
I mean, yeah, it's very strong momentum, very strong price action. So any dip, let's say tomorrow it opens again and it tries to move up, open being low, one could try to attempt and catch this moving train. Otherwise, what else can we do on a upper circuit stock?
All right, let's just pull up Eternal and Swiggy both, and we and Alex were discussing, it was there in a rapid fire also, both of them near the day's high level. Interestingly, just pull up Swiggy also side by side so we can get the entire picture. Yes, good buying coming in this counter as well. Amit, just final views on Swiggy. Stock is doing really well and positionally well placed than even Eternal. Your views on that?
I mean, Swiggy and Eternal both have moved up by about 20-25%, 30% in the last few trading sessions. The momentum has been very strong. Any dip in Swiggy close to the means, which is around 334, 335, could be a good opportunity to go long into this stock. And with respect to Eternal, the same view holds. Again, it has also moved up by about 28-30% in the last few trading sessions. And any dip towards the 280, 290 would be a good opportunity to accumulate some for this momentum on the upside.
Okay, the big winners in trade today, of course, seemingly the automotive pack are doing particularly well, but Swiggy Eternal, nothing to really sneeze at. Quite a big run up that you've seen. Navin Fluorine is actually interesting from my perspective. I'll tell you why. Because it started out in the green and a pretty stellar set of numbers for this particular counter. But it's lost quite a bit of ground. In fact, it's trading with cuts of about 4.4% at this point. Mr. Chokalingam, did you catch the numbers? And there was a point that was being made by a couple of brokerages where they said that the valuations are a little stretched at this point, and therefore, from their perspective, the upside potential is not very high. And we've seen in the past, even in the instance of strong numbers, that they get sold into on the day of the numbers. This seems to be playing out with Navin Fluorine. What's your view?
Yeah, certainly I agree with you. But of course, it has been a great company. Last 20 years I've been tracking it. From a small base, they have come up a long way. Even the quarterly result is very good. But only the valuation comfort is not there. So in case it corrects another 5-10%, then one can consider. Otherwise, I would not give a buy call or hold call at this price.
All right, thanks a lot, Amit and Chokalingam sir, for giving your time and your views on both technical and fundamental perspectives. But let's look at the market, how it's faring at the closing. Of course, the second straight day when we saw positive momentum building up. Remember, Nifty expiry was at play also. Some kind of a moderation coming in, but the overall support levels, that is constantly increasing, and that shows a healthy support of the market. Nifty Bank, however, on the other hand, the weak technical setup coming in, it's ending in the red, down almost 100 points. But the strength in the markets is the advance and the decline ratio. That's where we are seeing 3:1 ratio in the favors of the bulls. Also, let's look at the mid cap and the small cap index to see where the movement is happening, and the mid cap index is doing really well, up 0.4%, and even the small cap index showing a good strength. Let's look at the stocks from the Nifty index to give you the entire picture of how momentum is there in the markets. And Eternal is a top gainer, it's up almost 5%. Tata Group stocks, Tata Steel is also doing well, ONGC, TCS also rising in the trade. Where there is a sell-off, this includes Tata Consumer, Bharti Airtel, Shriram Finance, HCL Tech and Bajaj Finance. So select counters are selling also, and that's why there was a drop in Nifty. Remember, today is the expiry day as well. Also, let's point out the sectors which would be in focus, where the movement is happening and where the buying is there. Let's pull out the sectoral indices to give you the entire picture of how things are moving, and largely we see the auto, metal, MNC, mid-select indices are doing really well, but what's not working is profit booking happening in the PSU banking space and also the pharma space as well. But it's the day for the broader markets. Advances and decline ratio, let's just pull out that chart to show you how things have moved, and it has been a very smooth day. You could say 3:2 ratio in the favor of the bulls. Let's pull out the BSE 500 index to show you the stocks which should be in focus. Praj Industries, Chemplast, Sanmar, after its important con call, the stock is up almost 10%. Sterlite Tech, Sun TV, all buzzing on the behalf of a strong earnings. But what's not working? What's dragging? There are textile stocks which have been in pressure after the Bangladesh-US trade deal which was announced. We saw the nitty-gritties, and that's where the impact happened. Navin Fluorine corrected from the day's high as well, and Zydus Life also fell on behalf of the earnings. Aurobindo Pharma also fell after some more issues have been raised at their plant. So this is the entire picture for the broader markets, is for the benchmark indices, but net, it has been a strong day for value buying in the small cap space. And that's all, folks, for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express by Himangshi.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What
Hello, you're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today. So Dalal Street managed to maintain momentum. Nifty closed just below 26,000 levels while the Sensex jumped over 150 points today in trade. And looking at the sectoral picture here, it was tilted sharply in favor of the green. And media and auto have led the gains while metals were also shining. Pharma and PSU banks on the flip side were on the back foot and also were the top sectoral losers. Whereas Navin Fluorine has delivered a blockbuster third quarter, beating the street estimates on every front. Revenue has jumped 47% to 892 crores, and this is driven by strong performance across the key segments. Profitability, however, has seen an uneven, sharper surge. EBITDA more than doubled to 307 crores, while with the margins also expanding over 1,000 basis points to 34.5%. Net profit, however, has also seen impressive rise there of 122%, coming in at 185 crores against 83 crores last year. Let's keep up with the earnings momentum here, viewers. We have Aurobindo Pharma that has reported a profit beat in the third quarter, even as revenues and the operating performance came in largely in line with the estimates. Strength in the Europe business, drove the earnings surprise, while the US generic segment remained subdued. EBITDA also rose 12.4% to 1,773 crores, and this has been supported by steady gross margins, taking EBITDA margin to 20.5% versus 19.8% last year. Revenues were up 8.4% at 8,646 crores, and net profit grew 7.6% to 910 crores. The quarter also seen, they've seen a one-time cost of 65 crores related to India's new labor codes as well. Next up, we have Newland Labs that has reported a mixed quarter with margins coming under clear pressure. A weaker product mix and also higher operating expenses have hit the EBITDA performance, while the specialty business contribution has fallen from about 23%. Revenues were up 10.5% at 440 crores, and this has been supported by the CMS revenues driven by the commercial, stage molecules. But EBITDA has declined 10.9%, which is closely 11% to 77 crores. This has been, pulling the margins down 421 basis points to 17.5%. Net profit, however, has jumped 60% to 40.6 crores, offering some sort of relief at the bottom line. And viewers, Cipla's New York unit has come under regulatory focus after receiving 2 observations from the US FDA. Now, the findings were issued through a Form 483, which typically highlights, the areas where facility needs corrective action. The observations also follow an inspection conducted by the US FDA from February 2nd to February 9th at the New York site. So, Cipla will now be expected to address the points raised as part of the regulatory process. In fact, Lupin has successfully cleared its patent dispute over Mirabegron, and this has been resolving all the pending litigation with Astellas Pharma. Now, as part of the settlement, Lupin will pay Astellas $90 million under the agreed pact, and also the company will make an additional license payment to Astellas for every unit sold of the product going forward. Now this settlement formally closes the dispute and also paves the way for Lupin to continue commercial activities under the licensing terms. Now on to a stock that was buzzing away in trade. BSE has delivered a strong Q3 performance powered by robust revenue growth and also its highest ever quarterly revenue. Transaction charges rose 20% sequentially, and this has been reflecting, continued market activity. Overall, if you look at revenue grew 17.09% to 1,327 crores as compared with 1,134 crores earlier. EBITDA came in at 13.8%, which is higher at 861 crores versus 756 crores. However, the margins have seen some sort of pressure with EBITDA down, EBITDA margin down 182 basis points to 64.8% as compared to 66.7%. And despite this, the net profit has increased 8% to 601 crores, which is up from 557 crores. Because next up we have Marico that has announced that it will acquire a 75% stake in Skinetic. Marketing, this is marking a strategic expansion into the Southeast Asian beauty and also personal care space. Now, the aggregate consideration for the deal is 261.6 crores, and this has been payable through FY28. Now, Skinetic is a Vietnamese D2C company and also the owner of the skincare brand Candid, now strengthening Marico's presence in the fast-growing premium skincare category. And next stock that has been buzzing away is Eicher Heavy Engineering that has posted a strong third quarter with broad-based growth across the businesses. Revenue rises sharply while margins have improved on better execution and also richer mix. Profit nearly doubles from a year ago. The solid performance pushes the stock higher as investors cheer healthy fundamentals and also steady earnings momentum. Next up, we have Hyundai India that has delivered a strong third quarter performance, and this has been led by steady demand and also better pricing. Revenue grows at a healthy pace while margins also expand sharply on improved efficiency. Profit jumps strongly from last year. The numbers underline the company's pricing power and also stable operating model. Next stock is Amber Enterprises that has posted a strong third quarter, and this has been driven by growth in its electronics business after recent acquisitions, and consumer durables have also seen steady demand despite a weak air conditioner season. Operating margins have improved and also core businesses perform well, though the company reports a small net loss due to higher cost. And viewers, next up we have Graphite India that has posted a strong turnaround in Q3. Revenue has jumped 22.8% to 642 crores from 523 crores. The company swung back to profitability with 42 crores EBITDA versus an 8 crores loss last year, and also a 68 crores net profit compared to a 20 crore loss. EBITDA margin has improved to 6.5% despite a one-time impact of the 27 crores from the implementation of the new labor codes. So overall, a solid quarter driven by operational recovery and also better cost control. Next up, we have Samvardhana Motherson that has delivered a steady performance in the third quarter. Net profit is up 16.5% to 1,024 crores as compared with 879 crores last year. Revenues have also grown 13.5% to 31,409 crores, and this is driven by healthy demand across the key geographies. Operationally too, the company maintained its strength. EBITDA rose 13.3% to 3,043 crores, while the margins held firm at 9.7%, and this has been broadly unchanged. Overall, a stable and consistent quarter for Motherson, supported by volume traction and also disciplined cost control. Next up, we have Escorts Kubota that has posted a healthy set of numbers in the third quarter. Net profit is up 11.7% to 358 crores despite taking a one-time loss of 52.5 crores, and this has been due to the implementation of the new labor codes. Revenues, however, they have grown 11.3% to 3,281 crores, and this has been supported by strong performance across the business segments. EBITDA has jumped 30.7% to 435 crores with margins improving sharply to 13.3%. 9.3% as compared to 11.3% last year. The company has also announced a special dividend of 18 rupee per share and also unveiled plans to set up a 593 crores greenfield project in Uttar Pradesh. So overall, a robust quarter with clear growth momentum. And shares of Railtel were buzzing in trade today. The stock has seen a massive surge in activity, with trading volumes jumping to 9 times its 20-day average. The excitement comes after the company has bagged a major order worth 454 crores. Railtel will be executing this project for the railways, further strengthening its position in the telecom and the IT infrastructure space. The stock has also reacted sharply as investors cheered the fresh order win and also the strong visibility it brings to the company's pipeline. Yes, next up we have Balrampur Chini Mills. That has reported a strong set of numbers this quarter. Net profit has jumped 61% to 113 crores as compared to 70.5 crores a year ago. Revenues were also higher, up 22% at 1454 crores versus 1192 crores year on year. EBITDA has surged 63% to 202 crores with margins improving to 13.9% from 10.4% in the same quarter last year. A robust quarter 3 performance for the sugar major, and this has been driven by better realizations and also operational efficiencies. Next up, we have GS Power Infrastructures that has delivered a strong third quarter with revenue nearly doubling on the back of robust execution. Operating profit rises sharply, margins improve to around 19% and also net profit more than doubles. Next up, we have Pfizer India. That has delivered a strong set of numbers in the third quarter. Revenue has jumped nearly 20% year on year to 645 crores, and this has been supported by healthy growth across the key therapies. And operating performance, however, was even stronger. EBITDA has surged 56%, coming in at 228 crores, with margins also expanding sharply by 824 basis points to 35.4%. Profitability has also improved, with net profit up over 11% at 142 crores. So overall, a solid quarter for Pfizer India, and this has been marked by robust margins and also healthy bottom line growth. Next stock that was buzzing away in trade on the back of steady earnings was Happiest Minds, with modest revenue growth and also a clear improvement in the margins. The company has added new clients during the period and also continues to push its AI first strategy. Management says that it will set up investments in AI and Gen AI over the next few years. Next up, we have Jaguar Land Rover that has issued a safety recall for 2,278 units of its all-electric SUV in the United States. Now, after the regulators have flagged a potential fire risk, according to the U.S. National Highway Traffic Safety Administration, the vehicle's high-voltage battery may overheat. Now, increasing the likelihood of a thermal incident as a temporary fix, JLR will update the battery software either at the dealerships or via an over-the-air update, and this is to cap the charging at 90%. While the company works on a permanent solution, the recall is currently active, and owners, are being urged to take immediate action. Viewers, on to some more corporate action there. Internal turbulence at Anthropic is making headlines. Renank Sharma, head of Anthropic Safeguards Research, has quit in a public resignation letter saying that the world is in peril, citing interconnected crisis and also ethical tensions at the company. Sharma's note, which is being widely circulated online, has lamented the difficulties letting values consistently govern action and also suggested that he will pursue work aligned with his integrity. Now, the move comes amid ongoing debates about how fast AI firms are scaling safety research versus the product deployment. And a new Niti Aayog study says that India will need $22.7 trillion in total investments to reach its net zero emissions target by 2070. Now, spread over the next several decades, that works out to about $500 billion every year. And right now, India invests around $135 billion a year, and only $70 to $80 billion of that is going to the clean energy. Now, the study is saying saying that India must spend early, almost $8 trillion by 2050, including $5 trillion for the power sector alone. And out of the required $22.7 trillion, around $16.2 trillion can likely come from domestic sources, while the remaining amount would need to be attracted from the global investors and also international partnerships. And in a landmark legal battle in the US, plaintiffs are comparing social media giants to big tobacco. Now, alleging platforms like Meta's Facebook, Instagram, and Google's YouTube engineered addiction, especially among youth. Mark Zuckerberg is expected to testify as the trial tests whether design features prioritizing engagement has caused the harm. Now, the outcomes could reverberate across, thousands of similar suits targeting TikTok and also Snapchat, with implications for content moderation and also platform design accountability. In fact, viewers, the MSCI is set to announce its February index reshuffle tomorrow, with AB Capital and L&T Finance tipped, for inclusion in the global standard index. Now, the reject could also see pressure on stocks like IRCTC, while Astral remains on the edge. Now, the changes are expected to trigger meaningful fund flows later this month. And Elon Musk is saying that SpaceX is now working on a transportation system that would allow anyone to travel to the moon and eventually to Mars. Now, in a series of posts, Musk has said that the project is meant to reboot humanity's sense of optimism, adding that life cannot just be about one sad thing after another. There must be things that make us excited about the future. And the comments come just days after he has announced that SpaceX is shifting focus towards building a self-growing city on the moon. Now, Musk believes that a permanent lunar settlement could be ready in under 10 years, while a Martian city may take more than 2 decades. Now, this has even sparked a frenzy online. From memes about Martian real estate to debates about space tourism pricing, netizens are abuzz with Musk's vision of off-world living and also reusable rocket tech. Now on to some national news, viewers. India's long-pending 114 fighter Rafale order is reportedly close to final approval, just ahead of French President Emmanuel Macron's visit. Now, the deal, part of the multi-role fighter aircraft program, would significantly bolster the Indian Air Force, depleted squadron strength. Now, talks have, centered around the local manufacturing, technology transfer, and also lifestyle support under Make in India. So if cleared, this would be one of India's largest military aviation buys, enhancing the air dominance capability and also deepening the strategic Paris-Delhi partnership. And from defense preparedness, we move to a high-profile financial probe. Tina Ambani has reportedly skipped a scheduled enforcement directorate summons in a money laundering case linked to the ICICI Bank Videocon matter. Now, she was asked to appear for questioning as part of an ongoing probe into alleged financial irregularities and also the loan transaction. The ED may issue fresh summons as investigators continue mapping fund flows connected to the case, and the Ambani family has not commented publicly. Viewers, the White House has released a detailed fact sheet on the upcoming India-US trade package, highlighting tariff cuts, expanded market access, and also commitments, aimed at easing the long-standing frictions. Washington says that the deal will benefit US exporters in sectors like agricultural goods, medical devices, and also industrial products, while India is set to gain on the textiles, engineering goods, and also the IT services. Now, the agreement also includes steps to reduce the regulatory barriers and also streamline the customs. As both economies signal a reset, the deal could pave the way for deeper strategic economic alignment. And on to some more global news. Big development on the trade front, which weighed heavily on the textile stocks. Bangladesh was, they have secured a 19% tariff under its new deal with the US, along with zero duty access on the products that use American inputs. And it's not a surprise, as Dhaka has long pushed for such a mechanism, but it does raise concerns for India. With Bangladesh already a low-cost garment powerhouse, analysts fearing possible order diversion towards cheaper supplies, supplies there as well. So, however, experts have also cautioned that the immediate impact on India may be, limited. Zero tariffs simply give Bangladesh a margin edge, while India's bigger opportunities lies in gaining access to large export markets like the EU, UK, and eventually the US. But for now, textile sentiment in India remains under pressure on competitiveness worries. Whereas House Republicans have again advanced a procedural move to delay a floor vote on President Donald Trump's tariff agenda, effectively kicking the issue down the road, likely past July amid intra-party unease and also looming midterms. So the GOP leadership, including the Speaker, Mike Johnson, argues that the House needs more time and also for legal questions around the presidential authority to play out before committing to a definitive vote. Now, critics from both the sides of the aisle have said that Republicans are dodging the accountability on tariff costs that have hit the consumers and also businesses. Whereas US lawmakers are now digging into newly accessible, unredacted files related to Jeffrey Epstein. Now, members of the US Congress say that names appear to have been removed from public records without clear explanation, despite law requiring transparency. And in a separate but related development, Ghislaine Maxwell appeared virtually from prison before House committee. Now, she has immediately invoked the Fifth Amendment, refusing to answer key questions. Her attorney made it clear that she will only provide full testimony if she is granted clemency by, the former president, by the President Donald Trump. And the congressional review is also ongoing, and lawmakers are saying that more disclosures are expected in the days ahead. And the India-Pakistan T20 World Cup match on February 15 will proceed with ICC confirming that Pakistan has reversed its earlier boycott decision. And the U-turn follows a three-board meeting in Lahore involving the ICC. Bangladesh and Pakistan have, after the Bangladesh urged Pakistan to play for the larger interest of the cricket ecosystem. And PCB chief Mohsin Naqvi is also still awaiting guidance from Prime Minister Shehbaz Sharif before issuing a formal announcement. But key PCB demands were rejected by the ICC. And the ICC has confirmed that Bangladesh will face no financial, sporting or administrative sanctions for refusing to play their T20 World Cup matches in India after, citing the security concerns. The ICC said that Bangladesh retains the right to approach the dispute resolution, committee under existing regulations as part of the understanding reached. Bangladesh will also host an ICC global event before the 2031 Men's Cricket World Cup, subject to hosting process. And the council said that its approach prioritizes neutrality and also long-term support rather than punitive action. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere. Just stay tuned to NDTV Profit for more news and updates.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
there's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Market ends higher for the third session in a row amid F&O expiry. Nifty closes above 25,900 and Sensex gains over 200 points. Broader markets outperform the benchmarks. Media and auto gains the most. It's 24-carat magic in the air. That's what AMFI data suggests, with gold ETF inflows surging to a record 24,000 crore rupees. The AUM for gold ETFs also rockets to 1.84 lakh crore rupees. SIP inflows, meanwhile, remain flat versus the last month, but still elevated. India and US will implement framework towards finalizing interim trade agreement, says a White House fact sheet. Both the parties will continue talks on remaining tariff and non-tariff barriers. Indian textile companies come under pressure as US and Bangladesh sign a trade deal. US cuts reciprocal tariffs on Bangladesh products from 20% to 19% now. India is set to sign its biggest arms deal for 114 Rafale jets worth 3.25 lakh crore rupees. Sources say under this deal, Rafale fighter jets will be built in India, and the Ministry of Defence may clear it this week. Enforcement Directorate issues fresh summons to Anil Ambani's wife Tina Ambani in an ongoing money laundering probe against the ADAG group. Asks her to appear next week after she skipped questioning on the 9th of February. India and Pakistan will play their T20 World Cup match on the 15th of February after the Pakistan government took a dramatic U-turn, allowing its cricket team to take on India in a group stage game in Colombo. Hello and welcome. A very good evening, viewers. This is Profit 360 on NDTV Profit, and I'm Malika Mishra. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's first check the Indian markets. The market closed in green after seeing third straight session of gains on the back of positive global cues. Sectors closed mixed, with media as the top gainer for second session in a row, followed by the auto sector as well. Let's go across to my colleague Sharad Dubey for a wrap of the day's market action. Sharad.
It was a strong day of gains for the Nifty index, and interestingly, the support levels of the Nifty index on the closing front is increasing day by day. Broader indices also were doing really well, almost in the ratio of 3:2 in the favor of bulls. And we see largely earnings-driven specific moves were there, but the textile space was there. That's where the selling was there, especially after USA and Bangladesh's trade tariff deal had come. But net, it has been a very strong day for both Nifty, but Nifty Bank saw its gains reversing, and the technical setup for Nifty still remains strong. As we move ahead into the earnings, the last leg of the earnings for the third quarter, and that's something which we'll be watching out for. But remember, the global sentiment for the last two trading sessions has been strong, and a risk-on sentiment has been there.
As we see a risk-on sentiment, emerging spaces are slowly capturing the largest pie of attention in investing. And this is not just an observation, but a visible trend reflective in Prateek Agarwal's comment as well. In a conversation with us earlier today, the market expert said that he's focusing on NBFCs and small new spaces as the earnings growth is more visible in those pockets. Listen in to his remarks.
If the selling pressure reduces, once again the manifestation of global themes into this country would also increase. The last year was a strange year. Index showed just about 7-8% earnings growth and performed similarly. The broader market did much better and yet showed a large crack. And there is where the opportunity opens up. Newer themes, global themes with large valuation correction is a very nice combo to look at just now if you are taking a pause and looking at the markets with a fresh pair of glasses.
It's 24-karat magic in the air, and I say so because January mutual fund numbers have come and gold ETFs are in full power rampage. Investor appetite for the yellow metal has exploded in January 2026. Fresh data from the Association of Mutual Funds in India shows that gold ETFs pulled in a massive 24,039.96 crore rupee in net inflows for the month, to be specific, double the investment seen in December of 2025. And with that, let's bring in our colleague Alex for a deeper look at what's really driving this extraordinary surge. Alex.
Well, it's 24-karat magic in the air, and that's a song that's playing out in the mutual fund industry today. I'll tell you why. Let's pull up some of the data that's come through. Mutual fund industry has actually received record inflows into gold ETFs in the month gone by, in the month of January, and that is actually more or less the same as the active equity category as a whole has received. Both of them receiving about 24,000 crore rupees. In fact, if anything, gold ETFs have gotten slightly more than active equity has gotten. Active equity, by the way, includes flexi cap, large cap, mid cap, small cap, all of those together. Other ETFs, and this is the clincher, has gotten a further 15,000 crore rupees. What does this mean and why is it important? It also includes silver ETFs. So commodities as a whole has gotten a lot of inflows. This is reinforced by the fact that multi-asset funds have gotten inflows of 10,500, close to that, crore rupees, and this is got a commodities subcomponent as well. What is the context? And this is important to bear in mind because there could be a recency bias at play. In fact, it's almost certain that there is. Gold prices have risen nearly 13% in January, up to the 29th of January, at which point they have dropped over 10%. So a lot of people try to ride that rally. In fact, there could also have been instances of selling in certain other pockets and booking out perhaps in the sectoral thematic category or even in the corporate bonds category and a few other categories to buy into both multi-asset funds as well as gold and silver ETFs. So this is important to bear in mind. Of course, for the SIP figure, and this is something that we track very closely, it stayed the same at 31,000 odd crore rupees, which is strong. Of course, the net figure is much lower. A strong fixed income inflow, this is normally something that happens at the start of the quarter, has actually led to a pretty robust inflow overall for the mutual fund industry as a whole. And this is despite pretty low NFO activity, that's new fund offer activity. That only saw inflows of about 1,939 crore rupees, about 800 crore rupees or thereabouts in equity NFO. So All told, it's an interesting snapshot of how people are looking to invest. A lot of people gravitating towards gold and silver, but a lot of analysts, a lot of experts, a lot of advisors are pointing to the need to keep your asset allocation intact and don't jump whole hog into commodities because they could be risky.
Thanks for that, Alex. As equities take a dip and gold actually sparks the most, let's also take a look at what experts have to say about this month's mutual fund data. We spoke earlier to Anthony Herrera, MD and CEO of Mahindra Manulife Mutual Fund, on the latest AMFI data. Take a look at what he had to say.
There has been a lot of uncertainty in the market, currency, the India-US trade deal, the upcoming budget. I think that all led to the fact that active equity saw a reasonable lowering of interest compared to the fact that the last 3 months, 6 month, 12-month returns from gold and silver looked like magic. And that's where investors have flopped. But materially sense a change in mood in the last 6 or 7 days, as you've seen some correction in gold, but I think a lot more significant in silver.
Viewers, the United States has rolled out a reciprocal trade framework with Bangladesh that sharply expands American access to Dhaka's domestic market, especially in sensitive sectors like dairy, beef, and poultry. Bangladesh will grant broad preferential entry to US agricultural and industrial goods, while Washington cuts reciprocal tariffs on Bangladesh imports to 19% from 37%, with select textile and apparel goods eligible for zero duty. It also highlights a clear contrast with India's trade engagement with the US, where New Delhi secured tariff advantages while firmly protecting its agriculture and dairy sectors. Now, what really are the contours of the deal and how would it affect the Indian textile industry? Our Senior Executive Editor, National Security and Strategic Affairs, Aditya Rajkol, breaks down all the details. Take a look.
Merely days before the national elections in Bangladesh, finally, US and Bangladesh have secured a trade deal on Monday. This is on the reciprocal tariffs and consensus that has been reached between Dhaka and Washington, D.C. In fact, Bangladesh has secured 19% tariff on exports in the US under a new trade agreement. The deal offers zero tariff access to select textiles made in the US cotton and includes commitments on agriculture, energy, imports and trade reforms also. So this is a big development coming at this hour. The Yunus regime in Bangladesh has secured this deal with the United States. 19% is the tariff that has been reduced. This will be a good news for the exporters in Bangladesh because recently, just days before, there was a trade deal announced between India and the United States also that reduced the tariff to about 18%, and that led to a cheer among the exporters in India because there will be competitiveness between the exporters of Bangladesh as well as India, especially when it comes to textile. Now, this comes just merely hours before the national elections are to happen in Bangladesh and is likely to help some of the political voices that are seen close to Muhammad Yunus. Will this stabilize the economy in Bangladesh, or will this be leading to chaos yet again? Will only time tell. But the big question certainly is that as of now, the global reforms continue and the tariff policy continues by the United States. The US has been trying to arm twist several countries, including India and Bangladesh, when it comes to keeping American policies and American traders and businesses secure. But certainly good news at this moment for Dhaka, just hours before the national elections.
Thanks so much for that, Aditya. As you said, certainly a good news for Dhaka just before the national elections. But what kind of a news really it is for India, especially the textile sector, because we saw a bit of a sentimental drop in trade today for some of those textile stocks. And I have with me our Executive Editor for Corporate Stories, Nisha Podar. Nisha, what really is happening with this sector, especially in light of the recent framework that's been worked between Bangladesh and US? How does it really pose our textile industry, and how can we be prepared in this current moment?
So, Malika, even though in the market it was sentimentally down, but the key word here that is used in the US-Bangladesh trade is that if Bangladesh uses US inputs, then they get zero tariff on textiles. Now this, remember, was something as part of our own structured deal, was anyways part of the kind of US trade deal that we have struck. For us as a country, reciprocal tariff is 18. For Bangladesh, it is 19. But for textile, if they use US input, will it be that beneficial? And that same thing is even applicable for India. In fact, to put this into perspective, on technical grounds, I have with me an expert joining in. Ajay Roti, who's the founder and CEO of Tax Compass, now joins in. Ajay, how worried should the Indian textile manufacturers and exporters to US be because of the zero duty on Bangladesh's textile in the recently announced US deal between Bangladesh and US?
I don't think there is anything to be worried only on that account of 0% duty, because Nisha, like you rightly said, that is an option that was available anyway to the Indian exporters. Because today Bangladesh has not got an unconditional 0%. There is 0% applies if US sourced cotton is used, and which is available for us because a US source exemption is always available. So today, if Indian exporters were to use US cotton and export garment, we were anyway at 0%. We would get relief or exemption for that. So that per se does not really make either us uncompetitive or Bangladesh hugely competitive only on account of tariffs.
And is there also a caveat, Ajay, of 20% minimum use for this exemption to be there for India? Would you have that technicality? Yes. And is that same for Bangladesh as well?
So that's not there in the trade deal. It only says that, in fact, the trade agreement, if you read the Bangladesh trade agreement, also talks of certain limit on the quantity and quality, which may be decided by US and monitored. Therefore, it's an absolute, it's very clear that it's not an unconditional 0% for Bangladesh. How that plays out, what are the conditions US will impose, will have to be seen. But also important to remember, commercially, the US cotton tends to be much more expensive than what Bangladesh or India, for that matter, would be using at this point. Therefore, leaving tariff aside, it may not even make commercial sense to become competitive to buy US cotton and start exports.
That's right. So that puts Indian textile industry also at par with Bangladesh, given this particular caveat that it is not without condition, and Indian manufacturers would rather use Indian manufactured inputs because that gives them the cost competitiveness as well. So thanks for that clarity. But also in this whole large deal, what else has Bangladesh given up in this trade deal which India would not really give up and are no-go areas for India?
Nisha, I think that is the most important thing which can't be lost. Yes. That context can't be lost. There are a lot of red lines that we have. Genetically modified goods on agriculture, biotech goods, plus data localization. These are three top things that I can tell you Bangladesh has given up. If you look at the trade deal, very clear that biotechnology, which is approved by US fit for consumption, can be sold into Bangladesh, with Bangladesh not applying any further rules. Similar thing on products which are processed food. Very clear. It says that once US approves, Bangladesh has to accept it. What is very interesting is even on something like halal certification, the trade deal says once a US approved person certifies it as a halal certified product, Bangladesh has to simply import it and sell it. And Bangladesh can't apply any further rules or certification for it being halal certified. So some of these very clearly are red lines for us, no-go areas which Bangladesh has given up to get that 0%, which as we discussed is not even an unconditional 0%.
Pointed out on that halal certification, and also some of the sectors like agriculture, where Piyush Goyal has clearly enumerated that India's interests had to be protected, and that was one of the standoff points between India as well as US. My final question to you on data transfer. One of the clauses also suggests that Bangladesh to ensure transfer of data to the US. What does this really mean, and what is India's stand on this?
So we've been very clear on data localization. If you see, there are clear RBI rules on payment processors having to localize data. So, and just taking it as an example, if you see Visa, MasterCard, etc., have to process their data in India with data centers in India, the payment data relating to what you and I use on credit cards can't be stored on a server outside India, for example, and they've all been complying with it. There are similar data localization rules which are in the works for social media companies and others. And that's been a point of negotiation even between India and US. And India has been holding the ground, and rightly so, about data localization and data relating to Indians staying in India. Bangladesh has clearly given that up. In fact, they've also given up the right to tax digital companies, the digital services by US companies. So Meta, etc., will not be taxed in Bangladesh with a specific rule. They've given up the right to levy digital tax on US digital companies, and also free transfer of data, which means the Bangladeshi data can get stored and transferred to US servers, to put very simply.
Is something that is a complete no-go area for the Indian government, and so is many agricultural products as well. So thanks so much, Ajay Roti, for putting all that into perspective. The biggest headline really coming out, Mallika, from this discussion is that, first of all, the zero tariff for Bangladesh textile is conditional, and that particular condition is applicable for India also. So we are at par if we want to use US inputs, which won't be cost competitive for Indian manufacturers. And second, that Bangladesh has given up a lot of rights to the US as part of this deal, which are no-go areas for India, like data localization as well as agriculture sector.
So India has definitely stood its ground as compared to Bangladesh. So thank you so much, Nisha, and many thanks to Ajay as well for giving us his inputs. But viewers, shifting focus, let's now talk about the India-US trade deal. After having recently agreed upon an interim trade agreement framework with India, United States has outlined the path forward for the trade deal via a fact sheet. Now, the White House has released this fact sheet on India-US trade deal, enumerating several steps to bolster ties between the two countries and process to conclude the agreement. My colleague Rishabh Bhatnagar is here to share all the details.
So what's noteworthy is the timeline. Now that the first part of the framework has been agreed upon, what steps are being taken by both sides now. Of course, the framework for the interim deal has been signed. Now, the first tranche, the interim deal itself, will be finalized in the coming weeks. That's according to the fact sheet. And after that, it will be the final and the full sort of bilateral trade agreement that will be signed between both the sides. Now, with the tariff bit out of the way, there will be also additional tariff barriers, non-tariff barriers, technical barriers to trade, customs, labor, IP, government procurement, all these very important chapters that are usually a part of all the trade deals that India has signed. Those were missing from this one, given that this was the first tranche. But now we'll have negotiations over all of these very, very important chapters in the coming weeks, and India and the US will move towards finalizing even the second tranche of the bilateral trade agreement. So a little bit of an update coming in from the White House with regards to the sort of timeline that India and the US will now choose for a bilateral trade agreement.
So clearly, while the interim agreement is under active work in consideration, the bilateral trade agreement could be expected anytime soon in the coming weeks. And that's a big takeaway. But viewers, the White House recently unveiled the Trump RX platform, a new government online website aimed at helping Americans gain access to discounted prescription drugs. Now, this initiative, introduced by US President Donald Trump, addresses the rising cost of medications in the United States. But is it a disruptor or just an aggregator? My colleague Varsha is here to explain exactly the answer to that question.
Remember a couple of months back there was all halla about Trump coming up with his own website and saying that he'll be offering all the medicines at a very discounted price. Let's see whether that website is a disruptor or just an aggregator. What is that website? It's a government-backed price display portal, and which lists discounted price of almost 43 prescription drugs. Do not sell or dispense medicines. What it does, it shows cash price and headline discounts, and also provide printable coupons, which are redeemed at pharmacies or company-owned DTC platform. Now, why the discounts look large but aren't enough, if I were to talk about, because discounts are actually, calculated on the list prices, and the insurance companies already pay lower net prices after rebates, and hence pricing comparison is not like to like. Just for an example, if you go to Novo Nordisk or Eli Lilly, which offers obesity drugs, if you go to their website, the prices are similar to what Trump is actually offering. So that means no incremental price cut has been introduced by Trump so far. Now, but who actually benefits from this website, if I were to talk about? So limited cash paying patients only, which excludes government insured patients, and why the market impact is very limited when it comes to this website, because only 8 to 10% of Americans are uninsured, and uninsured population, if you see, is declining, and hence cash drug spending is a very small portion of total RX spend. Now only 16 pharma companies so far is onboarded. Most list drugs are off patent or generic. So overall, just in a conclusion, so Trump is actually offering those medicines at a price which already drug companies are offering at their website. So he's not, that website is potentially not a price disruptor, but just an aggregator for all the medicines.
So Trump RX not a disruptor, but just an aggregator. That's a clarification you need to note. But India's trade deals with various partners will bring more opportunity for the Indian auto sector. And that's not my comment. That's exactly what Tarun Garg, MD and CEO of Hyundai India, told us. He spoke to my colleague Danish Anand at the 5th Global Electrification Mobility Summit. And here's a small portion of that conversation for you.
We have seen that the government, US and India have signed a BTA. How do you look at this from an auto sector's perspective?
Look, we still are awaiting the details, but I think any arrangement which happens, it's good for the economy. And whenever anything is good for the economy, it will be good for the auto sector. So we always welcome, whether it was the EU or whether it is the US or any other treaty, because that really, really opens up so many opportunities for all of us.
So the safeguard that we are seeing that are set in place by the government, the 2500cc cap is it, as well as the 3000cc cap is there. Do you believe that this is enough to save our industry?
Look, like I said, we still have to go into the details, but I'm sure that government is actively engaging with SIM and we're always giving feedback. So whatever has been done keeping in mind the overall interest, what will be good for the economy. So we are very confident that whatever will happen will be very good for the auto industry and of course for the country as a whole.
So the sales have been really good for the entire auto industry. Even Hyundai had a great Q3, and even if you talk also about retailers are also doing really well. Till when do you believe that this demand is going to sustain?
Look, I think very clearly the GST 2.0 reforms have really spurred the demand, and we are very, very thankful to the Honorable Prime Minister for really bringing back demand into the car industry. And January was very good. I mean, even Hyundai had the highest ever sales in the history, and even the February momentum looks to be very good. So we are I think we are very hopeful. And also, if you see, with all these treaties happening, the sentiment is also positive. So I think while fundamentals are good, the sentiment is positive. Of course, the geopolitical risks remain, so we have to watch out for them. But overall, things looking much better than what they say about 10 months back.
So very lastly, how does the FY27 launch pipeline really looks like?
So I think on the investor day we have already announced the launch pipeline, and what we are going to say is that yes, we are going to stick to that. So a lot of exciting times ahead.
And with that exciting note, that's all the time we had on this edition of Profit 360. But I do urge you to continue watching NDTV Profit. For more news and updates, this is Malika Mishra. Thanks so much for watching.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
true.
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it. So that
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And today in the company in KYC which will be featured, I'll give you some hints before you can guess which company it is. The first of all, it's a lubricant company. It's a lubricant business around the entire industry. And when talking about lubricants, it's regarding the auto OEMs. It's one of the largest players in the world. They also have a global partner. That's the first hint I'll give you. The second hint is the brand is endorsed by MS Dhoni and also Chennai Super Kings, and interestingly he's one of my favorite players as well. The third hint, let's give you another hint for this company, and I think you are very close to guessing it because it's there in the emblem of CSK. Strong Q3 numbers have also come in after a long time. The stock has been under a consolidation for months. Also, another important hint I would like to give you is that the stock is up 57% in the last 5 years. That's still flattish if you are in the equity markets. So of course the mantra is ye dil mange more if you are an investor for this company. But let me introduce you to this company and give you this company which will be coming in the KYC today. Of course, we will do the entire setup for the company and the management, and the company in focus is Gulf Oil Lubricants. Yes, this is the company which we are talking about. And why are we calling this company? That's also very much important. So first and foremost, the reason is earnings. Earnings is the most important thing, and this time the earnings have been strong. Record levels for revenue, EBITDA and volumes. So that's the question we will be asking the management, why these numbers were so strong, at least for this quarter. How's the outlook looking like for Q4? And EV business, that's also very much important because the company has been acquiring a lot of EV businesses, and the future is definitely there, and lubricants are also used in data centers. So of course the street is looking at this company as all the new age tech theme companies are there which will be focusing on the lubricants, and it's very much important cooling solutions. The outlook on the rural and the agri markets, that's also something which we are looking at. The company is expanding very much, and that's why this becomes a very stable bet when it comes to the business model. On the show we'll have Ravi Chawla. He's the MD and CEO of Gulf Oil Lubricants, and we will be asking a lot of questions to Ravi regarding the industry and the company and the outlook ahead for the company as well. Also, let's look at about the company, what are the key details about it, and that's very much important. And if you talk about it, largely it's a lubricant company, and not from just the auto or the two-wheelers which you talk about, but there is also a parentage at play. It's part of Hinduja Group, and also Gulf Oil International is having stake in the company. It's the parent company. They are having a comprehensive portfolio in industrial lubricants system as well. That means a lot of B2B clients also the company is having. You must have heard about a lot of advertisements in which Dhoni was there, CSK was there. That's for the two-wheeler segment. But if you look at the B2B segment, that's where the focus is. It's you could see the B2C and the tie-ups are there with almost more than 50 OEMs and almost 1,000 industrial B2B clients. And it's pretty much interesting that they come in an entire big ecosystem. They are top 5 amongst the two-wheeler battery replacement segment as well. That's an interesting take, but that's on the lubricant oil segment. Tyrex Charges, it's a DC fast charging company. There was a recent investment there, but there is a whole lot of other investments also which are there in this space. Indra Tech, it's a UK based show AC charger mobility firm. So you see a lot of futuristic announcements are happening regarding the acquisitions and these investments, where the EV segment or the EV ecosystem is being targeted, and that's what makes it very much interesting to talk with Ravi on that. The passenger, but remember, when you start this KYC, I'm going to simplify it for you so it doesn't seem like it's very Greek to you. PCMO in this industry means passenger car motor oil. Let's see, what does CMO mean? Of course, CMO definitely means a motorcycle oil. So definitely these are the smaller names which you should be understanding. And OEM, you must be knowing, but I need to make you understand again, it's the original equipment manufacturer. These are the definitions, you should know that before we start our conversation. Also, the Q3 highlights, that's been really strong, and the quarterly numbers are there, that has done really well. Of course, that will impact the ratings also. The demand and the sales, they have picked up in the second half of the third quarter, and it's expected that the momentum might continue in the fourth quarter. The lubricant segment, the growth is coming in at 8% year-on-year basis, and management is claiming that it's twice of the industry growth rate, and that's something which is very much interesting, and we will ask Ravi how they are doing it better than the industry. EV business, they reported a positive EBITDA for both Q3 and 9 months FY26, and what's the path to profitability, that's also a concern on the street. Stable commodity prices have contributed to margin expansion. Remember, the crude, or it's a crude derivative product, which it's a lubricant, these raw material prices have been benign. A high double-digit gain coming in the PCMO, which is driving the B2C performances, and I know I've shared with you all the short forms. The highest ever quarterly volume in the OEM segment has been led by the PCMO segment. That's also important. All-time high volumes coming in the OEM franchisee workshops. That's kind of an ancillary service, but nevertheless on the higher margin side, and a double-digit gain coming in the motorcycle oil, and notably the performance in the agri OEMs as well. These are the important operational highlights which I have gathered in. A good double-digit growth coming in the B2B industry also, which includes infra and the mining segment. Though these are contributing less, but nevertheless the growth has been strong. And overall the guidance, they're expecting the momentum to continue in the fourth quarter. And remember that Q3 spillover is also there of some important up moves in the revenue and the EBITDA. There is a continued focus coming in the rural and the agri markets. And importantly, the EV subsidiary Tyrex, that has started acquiring more new marquee customers. And we'll be asking this, what's the customer guidance and the demand trends looking like, at least for the EV business, because more EV addition news flows are coming in for this counter. But of course, the street is not rewarding so much as the stock has been flat. I had mentioned that maybe there's a trigger which is needed for this stock. And this is the total guidance which we are getting for the company. So Gulf Oil, we have given you the entire picture of how things are going to move. But apart from that, let's also talk about what the KYC show is all about. We make you understand the company, we get you the management, but also the most important thing is the ratings which we give. You know, there are financial ratings, there are non-financial ratings, we combine them. 8 parameters are there. Income statement, balance sheet, cash flow, these are the important hard numbers which we see over the last 3 to 4 years. Take out the CAGR numbers, And also shareholding is there. Street cred is nothing but the share returns. If you are holding the stock, how much returns has come in 1 month, 6 months, 5 years, all of that we get in. And we also compare that with a peer in the valuation. And for this company, Castrol India is the closest player. And if you track small caps, Gandhar Oil is also there. But in our analysis, we have just kept Castrol and Gulf Oil because of their same sizes. Analyst stake is there, what the analyst community is expecting, and the next 12 months, what the return potential would be. But now let's start the analysis. The first one is the income statement, and already I had spoken about a very bumper or a very strong Q3 numbers coming in, and overall also you look at it, there is a steady margin increase in this kind of business. Remember, crude derivative product, lubricants and the crude prices are benign, and that's why you're seeing a good margin up move happening. There's of course the operational leverage at play as well, which the management Ravi will explain us. Revenue growth has been decent. It's a stable business model, and there is always a demand in the replacement market also. If you're tracking the auto sector, this becomes an auto ancillary, to be honest. And the net profit, that has also seen a decent jump. So net income statement, it's a strong thumbs up. So let's talk about the balance sheet also, how things are moving. Net worth has gone up decently. The debt levels, it's on the higher side, and that's what we'll be asking the management, Ravi, that why this debt levels are on the higher side. Is it the working capital, or is it the higher investments coming in the EV segment? That's why the debt is propping up. Cash is significant, and that's around 1,027 crore rupees of that. Is there going to be a more cash deployment in acquisitions or something for the shareholders? That's also a question to be asked, but net, it's decent. So balance sheet, I've given a 0.5 when it comes to our ratings for KYC. So we spoke about income statement, we spoke about balance sheet, but let's talk about cash flow, how things are moving here. And largely it's a stable model, but some numbers might be changing around. And operating cash flow, significant jump, 423 crore rupees coming in FY25. And look at that big bump coming in the net cash flows also. That's 320 odd crore rupees. Of course, there are some one-off items, but more cash, better it is for the business. The ratios improve, and that's why I've given a strong thumbs up when it comes to the cash flows. Also, let's talk about the return ratios, how the return ratios are panning out. And generally in these type of business models, anything above the 20% mark is very strong. But what good thing I've liked about this return ratios is it's increasing each year. 23% in FY22, and then it's been increasing for the next 2 to 3 years at a good rate, and now it's comfortably at 28% at its high levels. We can expect a 30% also. That's what the analysts have talked to me about, but maybe in the next 1 to 2 years, and that's where the idea lies. Be it the EV, be it the data center, that's the cooling angle which is there for the lubricants, and it's very much needed. Whenever you need energy, you need lubricants to cool also. That's the most simplest thing to explain you on that. And ROE is strong, so I'll give a thumbs up when it comes to the return ratios as well. Shareholding pattern, let's have a look. Yes, there was a big sell-off from the promoters, and I think they have put back in their cash balances. That's why it was looking lumpy, and that's what we are seeing. They have reduced their stake from 72 to 67%. FIs on the other hand have increased their stake, and even DIs, if you look at it, they have also increased their stake from 5 to 8%. There was some kind of gyrations here. There was a movement here because of important stake sales, but net institutional participation has been good, and I would say it's still a neutral rating when it comes to the shareholding pattern. So we spoke about the shareholding pattern, some kind of institutional interest also coming up. But has the returns come for the shareholders? Because they are the most important viewers. You are the most important viewer. You're the important stakeholder as well in this entire ecosystem. But to be honest, 6 months, the flat price is there, nothing much there. I went deep into it year to date, nothing has happened. It's down 3%. And also, let's pull up 1 year what has happened. The stock has been literally like a pancake. Now the concern is, if so many new announcements are coming and it's cash rich, why there is no interest coming in this counter? For the last 5 years, it's 57% only. So just break it down, year on year basis, around 10 to 12%. And definitely that's a question which a lot of investors had written to me regarding this company. So street cred, it's not good, up to the mark. So I'll give a thumbs down when it comes to the street cred. Let's talk about the valuations. Of course, if the stock hasn't done there much and if the earnings has gone up, that means the valuations become cheap. That's the basic mathematics. And there are two competitors, Gulf Oil and Castrol India. We have taken a 12-month forward P ratio to give you an understanding where does the valuation stand. In Gulf Oil, there seems an overhang in the stock, which the street is not pricing in the multiples. It's 11 times. Compare that with Castrol India, it's 18 times. So there's a very massive kind of a gap coming in, same type of companies, and that surprised me as well. What is that overhang which is, not making the stock tick? The valuations are compelling. So if you're looking at the current levels for the forward basis for the 12 months, valuations are very much attractive for Gulf Oil, and it's a strong thumbs up for me when it comes to the valuations. Also, let's talk about the analyst stake. This is our 8th and the last rating parameter, and almost 6 analysts are tracking it. And there's something very important here. There is not a single sell or a hold rating. All 6 of the analysts have given a buy rating to it. And since the stock was suppressed, we are having a 40% return potential in the next 12 months. And that's pretty much interesting. That means the street is very bullish on this counter, and because of that analyst stake I have given a strong thumbs up. Okay, now let's explain you the KYC ratings, overall how the company is placed. The numbers look good, the analysts have given a thumbs up, valuations are attractive, and net on the higher side of the ratings which we generally give, we are getting these numbers. Look at that, so many green thumbs ups are coming up. Cash flows also a strong thumbs up, return ratios has been good. The company is filled with cash. Now what the company does with cash, that's what we'll ask Ravi. Also the shareholding pattern, the institutional participation has gone up, and if you look at the street cred, all the investors who are stuck or invested with this counter, they will show concern and they will be listening to Ravi ji a lot. Valuations are very much attractive. Current situation, analyst stake, everybody is bullish. So totally 6 out of 8. That's the highest side of ratings which we are giving. But to give a little bit more perspective, we'll be joined in by Ravi Chawla. He is leading this lubricant business for India for over a decade. He's responsible for not only that, India's subcontinent, Africa and South Asian operations, and more than 30 years experience in consumer products, tires and luggage. It'll be very much interesting to get in Ravi Chawla as well. And joining us is Ravi Chawla. He's the MD and CEO of Gulf Oil. Good afternoon, sir. A very strong quarter coming in, and I saw your presentation. Everything was all-time high. Now, will this sustain in Q4 also? And what are the factors which led to a very strong growth in this quarter?
Yeah, thank you, Sharad. I think for over a decade, we have been growing 2 to 3x the market. So I think this just bears it out, and we are seeing a lot of good demand shoots. So this is a record quarter for us at 41,500 KL of lubricants. And we have had all-time high of EBITDA also. While there has been last year, the same quarter, a one-time sale of land, which we had 12 crores, and of course the labor cost adjustment, which is about 20 to 23 crores. In spite of that, we have seen EBITDA, of course, grow, and a bit of impact on the other profit, PAT. But excellent quarter in terms of demand. All our segments which we are focusing on are growing well. And we have strong partnerships with OEM, which is also translated in excellent business there. So a good demand for the industry. And we are seeing good shoots for us to continue our trajectory and try to maximize the volume gain and the margin.
That's pretty much it, Ravi, when it comes to the performance. But I'm just looking at the cash balance. It's very heavy. Is it going to be used for some acquisitions in the EV space, which we have been already doing it recently, or any kind of a reward coming in for shareholders?
So we are happy to announce the board has cleared an interim dividend of 21 rupees. It was 20 at this stage last year. So rewarding the shareholders is always part of it. We also have invested in, as you mentioned, in the subsidiaries for the EV. And we've got 2 sort of investments in India and 1 internationally. We will continue looking at opportunities both in lubricants and also, in terms of the mobility space. But as of now, we are doing well in our EV investments, and we continue to grow the core of lubricants, but keeping our eyes and ears open for any more investment opportunities.
Right. And Raviji, lubricants volume went up by 8% on a year-on-year basis, and you had stated that the Q4 also the demand is expected to, go strong. So what kind of a range we can expect in Q4?
So industry grows at 3 to 4%. In fact, year to date, our growth in volumes is 9.83% in lubricants. This quarter, it is about 8%. Quarter four for us has been a high quarter last year. So we would continue to look at our 2x the market growth rate at least. And in segments where we have lower than 5% market share, industrial, PCMO, passenger car, motor oil, as you explained, these would be double digit. And our industrial business and B2B business, which is infrastructure and industries, continues to grow double digits. So I would say 2x the market, market growing at 3 to 4% is the minimum we'll do. And definitely we are targeting to be around that 8-9%.
8-9% volume growth you can expect in fourth quarter. But the margins, they are coming in the early teens now, and the raw material prices, one of the key raw material is of course crude. These prices are on the lower side and it's aiding companies like yours. And if any operational efficiency kicks in, can we have a higher margin for the fourth quarter? What's your margin outlook looking like on, say, next 6 to 9 months?
On a practical basis, we've been saying 12 to 14% because last 4-5 months, you can see that though the prices of crude and then base oil has been steady, we have seen some increases in the exchange rate. Now, exchange rate obviously impacts our imports because, as you know, India also depends a lot on the imports for base oils. And while local capacity is coming up, the prices are adjusted. Plus, the exchange rate also impacts the additives we buy. So I think these two, the exchange rate has been the challenge. Otherwise, in this quarter 3, it has sequentially improved by 0.6% over last quarter. But we would like to be towards the 12-14%, and 13% is not a bad achievement. But of course, pricing actions are happening in the market as we speak, and hopefully we will be able to go to a good, higher end of the 12 to 14. And eventually, with our product mix and our push in the market for distribution, more B2C, more in terms of premiumizing our products, we want to move to the 14 to 16%, but this is subject to obviously these competitive and external things that happen on exchange rate, etc.
Right. And Raviji, the EV space, the way your acquisitions are coming up, and interestingly, your performance, you have seen, it's turned positive EBITDA. Now the path to profitability of your, of course, EV arms and the EV, strategy overall for Gulf Oil Lubricants India, what will be that?
See, we have identified chargers as one area, both the DC fast chargers and slow chargers. We are looking at other areas, and our philosophy is not to have cash burn. Obviously, we're investing in these ventures, and Tyrex today, which is part of us now, is selling 1 out of 4 EV buses is with us. In fact, we do better in certain quarters. We're also got AC chargers for MG and for VinFast. And we are spreading our distribution, our service network. So we want to look at these investments, and definitely we are targeting at least 400 to 500 crores in the next 3 to 4 years in the mobility space. And we are well on track to do that. Of course, subject to the new EV vehicles coming in good ways, like buses. This year has been slightly subdued, but hopefully the buses will come in more, and we are part of that and many other AC DC charging opportunities.
All right, but just removing the EV part, there is an entire industry, the energy industry, the data center industry, and the biggest requirement is the cooling solutions. And lubricants is also a part of this ecosystem. And we have seen, your peers also announcing important statements on the data center cooling solutions. Raviji, what is your take on that? The cooling solutions is being demanded all across the spectrum, be it domestic clients or international clients. What is Gulf Oil Lubricants doing here?
So data centers will require high energy. As you know, the computing is getting more with AI and others coming in. Globally, the trend is, of course, we have a lot of air cooled in India now. The water cool, the liquid cool is coming up. And we have 2 candidates. Our global technology is already developed. We are getting into specifications and testing of these. And the Indian market is going to be small in size, but it's a good value addition, and globally it's a good trend. So we are getting ready for it. And hopefully in the next few months, we will see some testing taking place where the specifications get validated, and we are ready with the product. So as it picks up, and I want to just add here that it's still a very small segment in India. Now, there are, data centers coming up, but it will take some time for it to pick up. But we are ready for, getting the next level of testing done for our products.
That's pretty much interesting. So the new age areas which you are looking at is, of course, data center, EV already. Gulf Oil has made their strides. Apart from this volume growth and the momentums which we are seeing, there is a continued focus on expansion, which you spoke about, the domestic part, the rural and the agri market. That's where the management commentary was bullish. So Ravi, I need your views on that. What are the expansion plans for that, for the rural and the agri space? And if you could just give out some volume growth for these areas which you are planning.
Yeah, so we have a strong brand. We have been investing in our brand for the last, I would say, 15, 16 years. With, we have 3 brand ambassadors, Mahendra Singh Dhoni, Hardik Pandya and Smriti Mandhana. We have been with CSK for very, very long. We also have global assets right now in Formula One with Williams and other properties globally. So our brand has reached a top 3 position, I would say, overall. And therefore, we need to increase our distribution because availability is key for driving purchase. While it is a low involvement to mid involvement product, lubricants, purchase is also related to availability. So we have close to 90,000 outlets and we are expanding our distribution double digit. We have also rural network with touch points. We've also got a tie-up with Naira, which has retail fuel sites across India. And we have our own branded bike stops, car stops. So there is obviously a big plan and ongoing effort, I think, post-COVID to get into independent workshops. So this is our plan to increase our distribution at least double digit. And overall, that's the mantra which helps us to get into creating that width and depth of distribution, which is important for any product. So I think that's been our sort of endeavor, and we continue to strive for that.
Right. Thanks a lot, Raviji, for taking out your time and talking to NDTV Profit about Gulf Oil Lubricants, India business strategy and road ahead. And hopefully we see in the IPL with CSK as well. Thank you very much. So that's the management, Ravi Chawla from Gulf Oil Lubricants, talking about the company, the Q3 numbers and the future. That's the data center, the EV cooling solutions, and they're a part of that ecosystem as well. So that's all, folks, for KYC today. Stay tuned to NDTV Profit.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were. Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. You know, the latest data on mutual funds is quite interesting. It is talking about the inflows in the month of January, and if there's one song that you can use as a theme song for this set of numbers, it is 24 karat magic in the air, because a lot of money going into gold ETFs. Guess how much? 24,000 crore. And in fact, it is just higher than the total inflows on a net basis into actively managed equity mutual fund schemes. Now, if you add the inflows into other ETFs, that's a further 15,000 odd crore rupees. And that other ETF category is important because it includes silver ETFs. And you throw in another 10,000 plus crore rupees that have gone into multi-asset funds, and you can imagine the kind of money that is going after gold and silver ETFs. There is, of course, recency bias at play here, because gold prices rose as much as 13% over the course of January till the 29th of January, when they hit the peak. And they've actually dropped over 10% from the peak. So a lot of people will have seen their investments lose a little bit of value. Now, this is understandable because these things often move with a large amount of volatility. So bear in mind that when you're investing in these commodities, you should pay attention to asset allocation, as a lot of speakers on this program will have told you. Bear in mind that your allocation towards gold and silver can range anywhere between 10 and 20% depending on the amount of risk that you're willing to take. The SIP figure, of course, coming in at 31,000 crore rupees or thereabouts, is robust, and that means it's good news for regular investors into the Indian mutual fund industry. But that last bit that I was talking about with regard to risk is something that I want to talk about in more detail today. If you have paid attention to the mutual funds that you're investing in, then you will have seen something called a riskometer. It's kind of like a speedometer with an arrow pointed in certain directions, and it tells you how much risk a particular mutual fund scheme is supposed to take. How is this determined, and how do you differentiate between various schemes that all are classified as very high risk? Because practically all equity mutual funds are designated as very high risk. I'm joined today by Nasir Salim, who is Managing Director of Flexi Capital. Thanks so much, Nasir, for taking the time, and I think this is a fascinating conversation to have. So first of all, how do you understand the riskometer and the various readings that it might throw up?
Good afternoon. Thank you very much, Alex, for having me on your show today, and to all your viewers. So a very key, important, pertinent point you've raised. Riskometer, is an attempt, in all earnest, by the regulator, in this case, Alex, where it's introduced by SEBI and it's implemented by AMFI, which basically helps investors quickly understand the risk level of a particular scheme that they invest in, right? Broadly, it displays, it's like a speedometer, as you rightly said, style dial, Alex, showing where a fund falls on the risk spectrum, broadly from low all the way to very high, right? And you can think of it in a normal parlance like a nutritional label for funds, right? It doesn't tell you whether a fund is good or bad, but it clearly tells you how risky it is in terms of upfront and in a uniform format. I think that is something which is very, very important in a riskometer. And I think it was introduced because earlier labels like just equity in a particular mutual fund or debt in a particular fund didn't capture how different risk profiles could be within those categories. So I think it's a very simple depicted riskometer, speedometer style, which tells you by and large which spectrum of risk does the particular fund fall in.
And you've described it very well, but here's my question, right? So, and we've been talking, I was speaking about gold earlier, Nasir, and I was looking at the fact that 24,000 crore rupees pouring into gold ETFs. And by the way, they have been designated as high risk. Equity is designated as very high risk. So there is just a shade, according to the riskometer, just a shade below very high risk. There is a considerable amount of risk investing in gold as well. So when you look at equity specifically, the fact that practically everything is in very high risk, how do you differentiate between the various categories?
So again, very pertinent question again, Alex. There, I think it's true that most equity funds, Alex, fall under the very high risk category because equities by nature are volatile, right? Now, usually SEBI has used, broadly, I'm saying SEBI has because they're the ones who kind of masterminded this entire thing of riskometer. They use a standardized framework, right, where the riskometer band depends, as I told you, on various risk profiles. So investors need to look deeper. Now, predominantly, what SEBI has been talking about and mentioning this is when you're looking at the various riskometers, it captures market cap, composition, category discipline, and portfolio characteristics of a particular fund, right? And that is what is the main distinction between the various risks that are assigned to a particular fund or an asset class for that matter. You spoke about gold. People usually understand that gold, they have a misnomer that, gold is very, very safe. It is very safe in the long run, I must tell you, but it can also deplete your fundamental capital value in very shorter periods of time. So therefore, I think it's very important, the three main important parameters here, when you look at the risk tolerance band for equity funds and the other broad asset classes, I think it's very, very simple. Small cap, for example, inherently will carry higher risk than a mid cap and a large cap. Similarly, if stocks are trading in low volumes, the liquidity risk also increases. So therefore, if funds are holding stocks with higher price fluctuations or higher underlying assets which are fluctuating as compared to some of the other asset classes, they may be regarded as more volatile, Alex. And therefore, the fund will then be demarcated as a very high risk category, yet one, again, something which could be more stable in terms of a large cap. A large cap has enough liquidity, doesn't fluctuate so much in terms of the underlying stocks that it holds in a fund. And that could obviously carry a little lesser risk as compared to a pure small cap or a particularly higher volatile asset class, which is where the fund is being invested into.
Ultimately,
so
you're trying to put all of these factors into play when you're trying to read the risk associated with. It's like if you're talking about the ingredients, like you said, it's a label. Then the label at the top is effectively the riskometer, and then it's up to you to look at the fine print and to understand whether the components of what you're eating is going to be okay for you. And you need to know, therefore, that you are possibly allergic to a certain type of nut and you don't eat whatever is in that mix that you've picked up, right? So with that example and taking that forward, I do want to ask you about standard deviation, because a lot of people use standard deviation, which is a measure of volatility, and they use it in conjunction with risk. And they say, okay, you can broadly judge how risky something is to hold when you look at the standard deviation. Is this appropriate? First of all, how do you look at standard deviation, and is this appropriate?
Alex, standard deviation plays a very, very pivotal role in our lives as as specialists in terms of distribution of funds and recommending and using that as a tool for our clients. So broadly, to all your viewers, a standard deviation is nothing but a measure, Alex, of how much a fund's returns fluctuate from its average return over a period of time. As simple as that, not very complicated. In simpler terms, it tells you how volatile or unpredictable a fund possibly may be or has been historically. So therefore, a lower standard deviation indicates it to be more stable in terms of returns, right? So that's the first broad important point. So when you're looking at standard deviation, which is for comparability, a standard deviation is good for comparing volatility between similar funds. That's the second very important point. So like two large cap funds or two hybrid funds, a standard deviation is beneficial. So you can't compare a standard deviation of a large cap fund, for example, with a small cap fund. I mean, you have to compare apples to apples, right? So SD is beneficial when identifying aggressive and stable strategies, and hence also understanding the returns consistency. I think that is very, very important, Alex. And the other one, can standard deviation be looked at in isolation? Standard deviation alone looks at historical volatility and does not explain where the volatility can come from market movements or funds or fund managers' decisions. I think that is something which is very, very important for you to note. How the fund behaves relative to its benchmark, or whether volatility was positive or negative. I think a standard deviation is just another supporting metric in the analysis that we put out for a lot of our clients, and not a standalone decision tool again, Alex, which is the most important part. I think it does help you evaluate alongside other risk and performance measures in a particular fund.
Yeah, there's a reason why they say, prior performance is no guarantee of future returns in the mutual fund space, because a lot of these metrics, Nasir, are backward looking, and you're trying to gauge based on how a fund has performed in various market cycles, and based on these metrics, whether it's likely to outperform or underperform going forward as well. But having said that, what are the other measures very quickly that you look at, not necessarily going to too many details, and then we'll talk about perhaps the most important to focus on for the investor?
So Alex, a combination of the other metrics that we use to gauge risk in any particular fund broadly, and are a combination of all of these. So it starts with standard deviation, we just discussed. And there's something called beta. It's again a very popular mix, a statistical tool that we use for gauging performance and risk. Risk, more importantly. I think beta is basically quantifies how a fund moves in returns with relation to its benchmark, right? So a beta of 1, broadly, we'll use the benchmark of 1 as in the unit number 1. A beta moves in line with the market. That's what it indicates. Anything beta of less than 1 is greater than 1, is more volatile than the market index in this case, and anything less than 1 is less volatile than the market. So I think, what it does is it tells you how is the fund's returns in relation to the benchmark, right? That's one important factor. The other one, of course, is alpha, which measures the excess returns generated, Alex, over the benchmark, right? A positive alpha obviously implies the outperformance over the benchmark, and therefore it's a very important risk parameter. We also use something called the Sharpe ratio. A lot of mutual fund managers talk about Sharpe ratios in their discussions. I think Sharpe ratio is, again, it measures the risks adjusted return. So a higher Sharpe ratio means the fund delivered better returns for the amount of risk taken. So, we compare it to risk-free returns and what is the return of the fund as compared to the risk-free return. That's, the risk measure that we use. Something very popular, again, is Sortino. Sortino is a fund risk-adjusted return by focusing on downside risk, which is basically focuses on negative volatility. Higher the Sortino ratio, the better the fund is considered. So combination of standard deviation, alpha, beta we spoke about, Sharpe, Sortino, and then of course, in hybrid funds, Alex, there's also a combination of credit risk, interest rate risk and liquidity risk. So all of those as well play out a very, very important, barometer for risk assessment.
Absolutely. And so the earlier ones that you spoke about are primarily equity-related risk measures. And you were mentioning that it's important to also look at risk for credit funds or for debt funds, and certainly for commodities as well, for gold and silver. You will generally see that the standard deviation is pretty high. So bear that in mind. Nasir, I think we've kind of elucidated this pretty well, or we've described it pretty well. We've got lots to talk about, and I think we'll delve a little deeper perhaps into hybrid and into fixed income funds at a later date. But thanks so much for joining me today.
Thank you. Thank you very much.
An important classification in the mutual fund space is passive versus active. And we've been talking about the difference between the two for years now, but in case you're new to mutual funds and you're wondering what I'm talking about, well, it's a very simple explanation for you. If you are investing in the largest companies in India, there is a classification by the Securities and Exchange Board of India for mutual funds called large cap funds. If you're giving your money to a fund manager and you're asking them to invest in a large cap fund for you, then they can choose from the 100 largest companies in India listed on the stock markets. And they have to put 80% of what you give them into these 100 stocks. They can pick and choose. They don't have to put in all 100. Now, if you don't want the fund manager to choose for you and you still want to invest in large caps, you can invest in a passive option. And that can be either the Nifty 50 index or the BSE Sensex, or in fact the BSE 100, or any one of several index options that are available to you. That latter is a passive investment option. But the thing is, over the years, the argument has changed from it being better to invest in passive on account of a cost angle to there being much more involved in the process of choosing passive. Joining me to talk about this is Vandana Trivedi, Head Institutional Business and Passives at Axis Mutual Fund. Vandana, thanks so much for taking the time, and I hope that I've set the context.
Yes, absolutely right. Pleasure is mine.
No, it's my pleasure entirely. Talk to me about what investors are looking for now. It used to be that cost aspect, but it's gotten much more than that. And the argument of large cap passive being significantly better than active is old. Now that is actually extending into the mid cap space as well.
Absolutely right, Alex. We began, and this is not just true for India, this is true for the global context as well. Passives found its way in the investment landscape as a cost-efficient way of participation in the markets, which is basically what we call as beta, which is just that you mirror the market returns. You want to participate in the market. You're not really looking to outperform the broad market. That's how passives made their entry into investors' portfolios, and that's how it made its entry in India as well. But maybe over the last 3 or 4 years, what we are noticing as fund houses, which are managing both active funds as well as passive funds, is that the investors' demand for passives has moved only from a cost-efficient investment option to looking for more niche investment ideas. So what you're seeing, and if I were to quote some numbers here, what you're seeing, say, in 2025, is that probably more money has come into what we call as sectoral index funds or thematic index funds. Essentially, you just took your audience through the kind of indices that you could look at. For example, you said, listen, if you want to invest in the large cap space, then you have the top 100 stocks. A passive fund would invest in all of those 100 stocks, which form the Nifty 100 index, for example, if you were to take that example. An active portfolio manager would choose a set of stocks from those top 100, and it's entirely their discretion. Whereas what's now happening in passive investing is we've just moved beyond what we call as broad-based market indices. So I would probably bunch up large cap like Nifty 100, Nifty 50, Nifty mid cap 150, all of them as broad-based market indices. Now the transition has now happened to sectoral market indices. So you see flows coming into, for instance, say defense as a sector, for instance, say metal and mining as a sector, and where the underlying portfolio just tracks those indices. There is no active selection of stocks, but we see investors asking for those options. There are smart beta options, and we could talk more about it. Smart beta options like momentum, value, all of these categories within passives is seeing substantial investor interest.
So it's much beyond just having that large cap allocation, which usually forms the core of your portfolio. And if you were to talk about core and satellite, now you've listed options available for people to consider the satellite allocation as well. So is this selection of a bouquet of passive products now going to be able to generate alpha kind of for you in your portfolio?
Yeah, I'd kind of put it this way. See, the alpha generation, I believe, will come from active fund management. I mean, there is no denying that. There is merit in having professional fund managers look into your portfolios and see what portfolio selection, etc., should be. But what some of these sub-themes within passives do is that they, out of your core portfolio of, say, a broad-based passive fund, you just like topping it up with the intention of seeking some alpha from a certain sector, from a certain index, instead of getting selective. So these themes are all narrow, right? For example, you can use any sectoral theme. A sectoral theme is a narrow theme. Now within that, if you were to get further more nuanced in stock selection, you may or may not actually exploit the alpha. However, when you're not sure about it, you're happy to just go with that index, which represents that narrow theme, which we call as sectoral index funds or thematic index funds. So there is a tactical play there which investors want to exploit, and that's where these index funds come in.
Yeah, it's a fair point. You know, I do want to ask about some of these factors, and it comes into the ambit of smart beta. The worry though, Vandana, is that people misunderstand that there are periods of outperformance and periods of significant underperformance for either the tactical allocations that you were talking about in terms of sectors. There can be periods where something does incredibly badly. How do you communicate that? Because ultimately, when you have a diversified portfolio, you are trying to invest when the chips are down, and you need to be able to hold when those chips are down, because eventually it will turn around.
Absolutely. So I think that's where, Alex, the importance of an advisor comes in. What we are able to offer is narrow themes if an investor wants to play those narrow themes. And like you rightly said, there are these options or there are these possibilities where certain themes completely do nothing for a long period of time if you're lucky, or usually they just take you through a huge drawdown. So it's not an easy journey. It's a kind of a gut churning journey money if you get it wrong, I would think. And that's where advisors kind of make the cut, and you take their advice to see which is that satellite theme that you want to play, say this year, say play for the next 3 years. They also probably help you understand if the drawdown in a certain theme seems temporary, and therefore you could wait the drawdown through, or you actually need to do some correction to your portfolio and maybe get rid of that narrow theme and replace it with something else, etc. But from a manufacturer's standpoint, what we're trying to also do is we recognize that themes go through cycles, and the cycles may be really short and really sharp, which may bust the risk profile of many investors. So therefore, what we do is we offer certain solutions even within these narrow themes, wherein an investor doesn't really choose a theme. For example, I can tell you that many of us in the industry do offer the smart beta investing as a basket wherein you have all the factors in. So what that does is that over longer periods of time, that combination of factors wherein you would have all the factors in as part of the portfolio would act better than at least say 3 of the 4 factors at any given point in time. Obviously, there is always one factor which is really outperforming. So there could be a value today. There may have been a momentum last year. There could be something else next year. So it's very difficult to time it, contextually, and you're pretty much always smart only in hindsight. However, if you have a multi-factor kind of an exposure, then what you're doing in this smart beta category is that you are present in all the 4 factors. And historical backtesting data has shown that these kind of multi-factor options end up performing better than at least 2 to 3 out of the 4 factors. You would not get the best performing factor as your return, but overall, on an average, you're doing better. And therefore, those are certain solutions that we are offering to investors for people that want to do this directly or without help of an advisor.
You know what? So what we've done over the course of this conversation, Vandana, is present our viewers with a sense of the varied options that are available in the space. Not just that plain vanilla large cap index fund that most people associated with passive. It's also gold ETFs, it's smart beta, as you pointed out, in sectoral and thematic indexes as well. But thanks so much for taking the time. Pleasure speaking with you.
Thank you very much. Thank you. See you.
See you. All right. Well, that brings us to the end of this edition of Your Money Matters. Thanks so much for watching, and do stay tuned. This is NDTV Profit.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech.
Watch out for this one, Mr. S.K. Bajpai, Senior VP Finance and Legal, CFO at GSFC, joins in right now to talk about the numbers and the outlook ahead. Did the quarter shape up as per your estimates, Mr. Bajpai, or would you have hoped for more? And are there any implications of either some carry forward deals or some delays which may rub off on quarter four numbers?
No, the quarter went well, as stated that the company delivered a strong financial and operational performance, demonstrating robust growth across key metrics. If we see sales, this is 5% higher to 2814 crores in quarter three. Also for the 9-month period, if you see that it is 9% higher than previous 9 months, that is 8,313. PBT also rose by 9% in Q3 and 19% in 9 months. If we see PAT is increased by 18% in quarter 3 and 20% in 9 months. So that is a good set of number. However, for the coming quarter, quarter 4, it is not a seasonal business for the fertilizer industry. So we cannot expect much from the quarter 4, but still we are trying. A lot of developments at the geopolitical situation is there. Government of India has already entered into the agreement with the European Union, FTAs with the European Union and USA. So there will be good chances for the export of melamine, caprolactam, and HX crystal product of the GSFC. So that will boost the performance of IP sector in quarter 4.
So, Mr. Bajpai, just to understand, do you see raw material costs going up even further? How does that impact your Q4 and the full year?
Yeah, raw material prices like phosphoric acid is up by 34%, sulfur is very high, 130% up, and sulfuric acid 91% up. But we have the long-term agreements as far as sulfuric acid is concerned, and we have also capitalized our sulfuric acid 5 project at GSFC Baroda Fertilizer Nagar unit. So that will boost the production of ammonium sulfate and ammonium phosphate sulfate, and sulfuric acid will be available for these products at an appropriate price because it is our own production. So it will not impact much as far as the Q4 and the whole year is concerned.
You talked briefly about the EU FTA and how it would help. Can you be more specific on this? Of all the FTAs that we've signed, does this help you with, better kind of opportunities? Where exactly does this boost for you?
Yeah, actually, FTA signed with the European Union, where there are material like melamine and caprolactam is exported to the European countries. If this tax tariff is not there, then it will impact around $60 per metric ton as far as melamine is concerned. So, and it will be a good realization in the export market. We have also taken up the matter with the Indian government that there should be some relief as far as our own industrial development in the country is concerned, like Atmanirbhar Bharat, because we are only the manufacturer of melamine in the country, but we are exporting because of not the good realization in the domestic market.
Okay, so therefore let me double down on that, Mr. Bajpai and Alex here. I want to ask about melamine exports and higher traded ammonia as well. So, but specifically on melamine exports, if things go along the lines that you're hoping, and we're expecting that this EU deal will be signed and will take effect later this year. So what is your anticipation of FY27? Do you have a hopeful target with regard to export share for melamine?
Yeah, certainly. Because if we see in the Q3, we have boosted our export a lot in the melamine is concerned. And further in the, as soon as the notification is announced and we are getting that benefit, for the next financial year, as you rightly said, will be good for us as far as export of melamine and other products like caprolactam and HX crystal that is concerned, because we are only the manufacturer in India, and if the foreign market is available and good realization is there, it will certainly boost the profitability of the industrial product segment of the company.
Is 1 + 1 = 2. What I'm actually looking for is how much does it go up by? What would be the ideal ratio for you for melamine exports as a percentage of the total, and what are the implications of that on the bottom line?
So actually, if we see that nearly 10 to 15% additional revenue we are generating while exporting the melamine to the export market. So we can expect at least 3 to 4% jump in the bottom line, because main focus, the main revenue source is the fertilizer. So industrial product segment only share the 25 to 28% in the total revenue. So melamine as per se in the total revenue will be a very limited role to play.
So specifically with regard to inventory management as well, I'm wondering, Mr. Bajpai, how are you calibrating heading into Kharif, and what is your channel inventory position right now?
So inventories are well placed in the market. As far as DAP is concerned, DAP is good in the channel, and urea is also available. We are also getting the shipments from the importing the urea and placing it in the market for the next season. So there is no problem as far as the fertilizer availability to the farmer is concerned in the next season.
Mr. Bajpai, a nearly 200 KTPA sulfuric acid plant, I believe, was commissioned in January. So do we see the benefits of it play out in Q4? Part one is that. And part two, your presentation says that there are ongoing projects, a 1200 MTPD train modification, APS unit at Sikka unit, etc. When do these come on stream? Do they have an impact on FY27 numbers, or are these beyond that?
No, as you rightly said, sulfuric acid plant is already commissioned and is working at very well at more than 100% capacity. And sulfuric acid price is very high in the market. So it is good that we are producing our own sulfuric acid from the sulfur taken from the Reliance and Naira and other nearby refineries. So sulfuric acid price is in control, and it will boost the production of ammonium phosphate sulfate and ammonium sulfate. So ammonium phosphate sulfate is the product which gives the better remuneration and better margin. And that is the highest production and record production of APS we have done in the Q3. So it will further boost the production and the margin of the product after commissioning of sulfuric acid 5 plant.
On that, therefore, the run rate seems to be that your March numbers or the Jan-Feb March quarter numbers, the EBITDA numbers don't look very good usually, right? 24 was a bad number, 25 was a bad number. FY26, because of this plant itself, does it shore up your EBITDA numbers in Q4?
Yeah, it will certainly make this number better in comparison to the past year, because sulfuric acid prices are just now more than 17,000 rupees per metric ton in the Indian market. So it will certainly help in the reduction of the cost as far as APS is concerned and ammonium sulfate production is concerned. And the next full year, if you see that the sulfuric acid plant will be a boon for the company, and if you see the full year, it will give a lot of cost reduction as far as sulfuric acid prices is concerned, because as you know, the certain Asian countries has banned the export of the sulfuric acid to other countries. So that is the reason the sulfuric acid prices are very higher in India. So sulfuric acid 5 plant capitalization at right time for the GSFC will certainly boost the top line and bottom line.
Great for you, and therefore, Mr. Bajpai, I would love for you to give me 2 points of guidance if you can. One, what is the revenue run rate that you expect, let's say, for FY27, based on what you are doing thus far in FY26, because we are almost mid-Feb, you would have a fair idea of what you would do in FY26. So what's the kind of growth that you envisage there? And 2, more importantly, if indeed you get the benefits of this sulfuric acid plant for the whole year of FY27, what is the likely EBITDA margin performance that you can clock in for FY27 as a year?
One more product we are capitalizing in our Sikka plant, that DAP train we are converting into the APS production, and that facility will be available in the coming September or October. So that will boost the production of ammonium phosphate sulfate, which is the star product and as far as fertilizer is concerned for the company. So that will again make our top line better and the bottom line also. So in the next year, if you see that at least 10% boost in the top line we expect, and as far as EBITDA margin is concerned, we expect around 8% EBITDA margin in the coming financial year.
Okay, so 10% top line growth, EBITDA margins likely to improve from about to 8% from about 7% in FY25. Interesting. Okay, Mr. Bajpai, we'll leave it at that. Thank you so much for taking the time out and being with us. All the best for the quarters ahead.
Thank you. Thank you, sir.
We've got Mr. Adipalli Krishna Sai Kumar, who's director at Apollo Microsystems, joining us today. Mr. Sai Kumar, thanks so much for taking the time, and pleasure speaking with you. Give us a sense of what contributed to the 70% up move in revenue, and whether or not the mix changing had a bearing on the margin contraction that you saw.
No, the mix change is not the bearing of the margin contraction. Actually, this is a consolidation figure. It's not a standalone figure. The standalone figures are still robust. You can have a keen eye on that as well. So we have been communicating very clearly that in the consolidated there could be a small shrinkage in the margin contraction owing to ideal explosives consolidation happening. So in the last quarter we had a 45-day period of consolidation which took place, as the marking date was on 16th November up to 31st December. That actually added. But otherwise, you can see the overall net profit. We maintained it a very, very decent and robust levels. Continued onto it actually. So this is something which is expected of the consolidation once it takes place. This is going to have
Mr. Kumar, just for our understanding, what exactly is this consolidation and this marking day which you're saying has impacted margins? If you can just explain for our viewers as well, and those who maybe don't understand your industry entirely.
Exactly. We acquired Ideal Explosives Limited few months back.
Okay.
And the consolidation date started from 16th November onwards, actually. Okay. So it's the overall consolidation is only for the 45-day period in the last quarter, actually. So that's
the adjustments. So just to understand, the adjustments post your acquisition is what has led to the margin compression.
Absolutely, yeah.
Okay, let me just ask you a bit about this acquisition, because this was exciting. It's a step down arm now of the company and manufactures bulk explosives for mining and infra. How do you think that this is going to add to your balance sheet and to what you have to offer? What is the strategic positives of this acquisition?
Ideal Explosives we have acquired, so that it will be a backward integration for us. We are bringing in the high energy military explosives manufacturing also into this company. So going forward, currently we are outsourcing this explosives and propellant, manufacturing to other companies, and some of them we are tied up with Munitions India Limited also. But presently going forward, there are bulk orders expected also for our anti-submarine warfare rockets, for our aerial bombs, for underwater mines, limpet mines, node mines, and there are several other programs, which we are doing, for which all the explosives and the propellant requirements will be manufactured in Ideal Explosives. That was the intention behind acquisition of this particular company, actually.
Mr. Sai Kumar, I'm sure that my colleagues will want to delve into some of the details of the P&L, but my eyes on the trajectory of ROCE that looks pretty robust, heading from FY21, where it was 9% or 8% in FY22 to 12% in FY25. I'm wondering where the target is and what FY26, 27 is going to look like. Does it improve further in your opinion?
It should be.
Sir, that's a two-word answer. If you can spell that out for me, and what is going to contribute to it, and where do you see it going?
Yeah, see, the return on equity and return on ROCE figures. These are certain things. They vary based on the continual, corporate actions that we are taking, from time to time. But broadly, I would say that, the rate at which, the CAGR rate at which, the revenues are growing, okay, definitely it is going to have an, huge, improvement in the, all these figures as well, actually.
Mr. Kumar, good morning, Neeraj here. The first 31 pages of the presentation are talking about defense products. You are really going big on this. Is this all catering to the domestic market, or is exports going to become or already become a significant part of your portfolio?
Exports are going to be a very significant part. We are going very strong with our, munitions as well as a complete weapon systems manufacturing. The requisite business development has been aggressive for the last couple of years. And we are almost in the verge of making a breakthrough in very shortly in next 1.5 quarters. That's what I'm expecting of, actually.
Through in your export ordering, you mean, or in your product, you mean?
Absolutely.
In the
exporting exporting my product, yeah.
Exporting your product, okay. So where would the, let's say, the 9-month number or the assumed FY26 export share be, and where do you think it will be, let's say in FY28?
Currently, the exports are not much, rather, in this financial, it's not going to be anything significant. But in the next financial year, our exports are going to pick. But in terms of the revenue, the earlier guidance we have given 45 to 50%, that's something that we are going to maintain in this financial year, whatever guidance we have given.
I missed the number. You believe what it will become in FY28, sir?
FY28, at least, with a growth rate of, on a standalone basis, if I make a growth rate of 45% continued in next financial year as well, in which minimum 10% contribution will be there.
Will be from exports. Okay. And console numbers, you think you will do about 45-50% of growth? Because your multiples are so high that the street will probably expect you to deliver at least that 40-45-50% kind of growth.
In the console level, next financial year, also in the console level, there will be a growth of minimum 25 to 30%, growth. Standalone basis, 45% growth will definitely be there actually. We are still in the process of, complete, although the acquisition technically is complete, understanding that this thing and all. We are trying to increase our export revenue in the consolidated business where ideal currently is our, the only subsidiary, which is making revenue. But going forward, before end of March, we are going to make at least 1 or 2 acquisitions more where the revenues further are kicking. And one of the company whom we are eyeing an advanced stage of, due diligence, that is something which is already having some exports. So that's further going to give advantage both in terms of exports and consolidated business. But the revenue also, in a very conservative base, I can say on a consolidated basis, at least I will still continue to grow 25 to 35%.
Sai Kumar, just on that last point, you're saying advanced stages of due diligence. Does this get completed in the fourth quarter itself?
I'm expecting offer. The counterpart continues to extend a single support.
Okay, so from that perspective, what is the addition potentially to the top line, and will you have a similar situation where you had the acquisition in the third quarter? There was a little bit of a settling in, if you can call it that. Does that take place for this acquisition as well? Is it a large material acquisition?
One of the acquisition is not a large material. One of the material is a decently a low medium size acquisition actually.
Okay, and how is this going to be funded, sir? Is it going to be funded through internal accruals?
Yeah, partly through internal accruals, partly the promoters are going to need, because this is an acquisition which we are going to do from the subsidiary. So that's how it will be done.
So will there be any requirement of an infusion at all?
There are funds available in place. Okay. The funds available in place, the promoters will be putting at an appropriate time.
Understood. Okay, so we look forward. It sounds like an exciting time for you, Mr. Sai Kumar, and for Apollo Micro as well. We look forward to speaking to you again once these deals get announced, and of course, to look at the numbers once the fourth quarter numbers come through as well.
I'm here joined by Dr. Saloni Wagh, who's the Managing Director at Supria Life Science. Well, Saloni, welcome at NDTV Profit. Always pleasure to have you.
Thank you so much for having me.
Pleasure is all ours, Saloni. Well, Saloni, how will you see much stronger growth in Q4? Now, why I'm saying is because the guidance that you had given us was about 20% growth when it comes to revenue. And if considering you'll maintain that guidance, the Q4 should be the strongest of all. So are you seeing that trend?
Yes. I think quarter 4 should be the strongest quarter for us in this financial year. And we are still very confident that we will be able to achieve that 20% revenue growth that we have indicated before.
Right. With the margin at 34 to 35%, if I'm not wrong.
Correct. So 33 to 35% is what we have guided on the EBITDA front. And we are still very confident that we will be able to maintain that margin guidance.
All right. Now, Saloni, let's talk about some projects which were in pipeline. 2 or 3 projects in API Advanced Intermediate were supposed to be announced by you. Anything on that?
So these projects are progressing really well. We have one project going on the API front for an anesthetic API. And then we also have an advanced intermediate project which is going on. Both of them are moving well. The advanced intermediate project that we have already signed the term sheet and the validation batches are in progress. So from next year onwards, you can start seeing commercial revenue contribution from this. And on the API anesthetic front, the project that we have is still in the term sheet signing stage. So hopefully in the coming few quarters, we will be able to make some positive announcements around that.
Okay. And also contrast media product launch was targeted at end of Q3 or beginning of Q4. What's the update there also?
So we are targeting the launch of the contrast media product in quarter 4. Ideally, yes, it was supposed to happen in quarter 3, towards end of quarter 3, but we are in the phase of scale up and validation, and we are still actually working on the process a little bit more. So I think by quarter 4, we should be able to launch this product. Very positive on the launch of that product, and everything is going in line with our plan.
Okay, and also there was some delay when it comes to whey protein and some nutrition products. What's the update there?
So things on the whey protein is also moving positively. It's a very new product which is getting introduced into the market. There is no like product in the market in India at the moment. So a lot of research and development has to happen at the formulator's side, which they are currently doing. I think once the R&D work is completed and once they are ready with their final product launch, you will see the volumes of the whey protein also picking up. I don't see much happening in quarter 4 of this financial year, but I think next year definitely there should be some movement on the whey protein front. Other than the Indian domestic market, we are also now started tapping the export market, and we are getting some good breakthrough in Southeast Asian markets like Malaysia, Philippines, Singapore. These are some of the other markets also that we are targeting. So hopefully by next year, you should be able to see some revenue contribution from whey protein.
Right. And Saloni, will future expansion be formulation-led or API-led? Now, why I'm saying is because recently I've entered into formulation also. So anything if you could, help us with.
So you will definitely see some revenue contribution in quarter 4 from our Ambernath site. So this site is our finished formulation site in contract manufacturing. We will be commissioning this site in quarter 4 of this year. The site is fully ready for commercial operations. So in the coming next 2-3 years, you will see meaningful revenue contribution from finished formulation as well. The next leg of expansion will happen at Patalganga, which is the new land parcel that we have bought. It's a pretty large land parcel, and there we would be doing a combination of API as well as finished formulation. So I think growth will come from both API, because every year we are now adding 3 to 4 new products into the pipeline. So for producing those and expansion of those, we need the Patalganga site, as well as finished formulation. Once this site is fully occupied, we will need to grow in the Patalganga site. So both areas I think we would be focusing on.
And also, what's the peak revenue of this FDA facility, number one? And number two, can CDMO become a material share of your revenue in medium term?
So I think for CMO, CDMO to sort of start generating meaningfully and become the larger contributor to revenue, we are at least 2 years away. Predominantly in the next 2 years, you will see major contribution coming in from the API basket that we have. Yes, if you ask me long term, 3 to 4 years down the line, the CMO, CDMO would be a large contributor, specifically the Ambernath site.
Okay, and Saloni, North America is still small for you. What's the roadmap here? What's the target contribution?
So North America, we have seen a slight increase in this quarter. It has gone up from about 3-4% to about 6% in this quarter. We have always maintained that Europe is actually one of our focused markets, because the products that we have in the portfolio have an inherently large market in Europe and Latin America. And if you see both these regions, we have done phenomenally well. In fact, LATAM this quarter has grown from 21% to almost 24%. Having said that, once some of the new launches come in and the contract manufacturing facility at Ambernath scales up, you will see the North American contribution go up slightly. But for the next 3-4 years, Europe and Latin America still would be the dominant markets for the company.
Okay, and also 74% of your products are backward integrated. How high can this go?
So we are targeting at least going up to about 85% in the near future. And then when the other APIs scale up, that percentage would go up.
All right, and also, Saloni, I just wanted to know the revenue potential of newly launched cardiovascular product. If you could give us an idea about that also.
So it's a cardiovascular advanced intermediate that we have launched in quarter 3. The overall global potential of this particular advanced intermediate is about $90 million.
and we are still just, getting into the market and gaining some traction. However, as this is an advanced intermediate, we are very hopeful that the revenue contribution from this would be slightly faster as compared to any API launch, because there aren't too many regulatory barriers. So I think it would be a very large contributor to revenue starting from the next financial year.
All right, understood. Well, thank you so much, Saloni, for joining us and helping us with all the answers, and all the best.
Thank you so much for having me. Always a pleasure to interact with you.
Thank you so much.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Good evening, welcome. I'm Vikram Oza. You're watching The Big Question on NDTV Profit. Now, if you go to see, for the last 30 odd years, India's tech story has had this one big hero, and that is IT services. We wrote the code, the world paid for it,